Och sen, and welcome to ABG's Investor Days. My name is Carl Bokvist. I'm the responsible equity analyst here at ABG, covering CTT Systems. With us today, we have the pleasure of hosting CTT and CEO Henrik Höjer. So the format will be as such that Henrik will begin with a presentation, and if time permits, we will wrap things up with some Q&A, moderated by me. So without further ado, Henrik, thank you for joining us.
Thank you, Carl. And thanks for having us. Also having us in the first position. I think that's good when everybody's fresh, including myself. So let's start with the presentation. I'm Henrik Höjer, CEO of CTT. I will start with a just short feedback or recap of the third quarter, and then I will try to talk a little bit more about the future and our forecast, how we see the coming quarters. Marcus was supposed to be with us as well, our CFO, but due to time conflicts, we left him at home, and I'll do this presentation. So in the third quarter, as most people already know, we had a really strong quarter, driven by the aftermarket, which really recovered, and it was even stronger than we anticipated. It was an increase quarter to quarter with 40%, and it was actually the all-time high for CTT on the aftermarket. Even more happy were we with Boeing resuming deliveries of the 787. They've been grounded for 2 years, and now they're finally back delivering aircraft, which we think is super good. They have 120 aircraft built when they started the deliveries again, and that represents a 10% population growth to CTT when all these aircraft are out on the market. I'll come back to that a little bit later, how they see the future. They will gradually increase their production rate from 1 to 2 aircraft, which is what they do right now. And then on the private jet markets, we also had some orders, one BBJ Max, and we also had one ACJ 220 business jet coming in. So the financials in short, net sales was 65 million, an increase with 62%. It actually beat our forecast a little bit due to the little bit stronger aftermarket. Our EBIT was 33 million, and the EBIT margin was 51%, which is an all-time high. Earnings per share was 1.90 Swedish crowns, and a strong operating cash flow on 31 million. I would like to add there that this quarter was an extremely strong dollar, and also an extreme percentage of the aftermarket being 86% of our sales, and both of those, I think, is a one-timer that will not come back in the same mix again. But otherwise, we're super happy with this third quarter. If you just look at the bridge to recap that a little bit, the increase was driven by the aftermarket, as I said, really, really strong. But also private jet actually picked up a little bit, which is really good for us. And then OEM continuing to shrink compared to the previous quarter last year, and also retrofit being on a very, very low level, actually on 0. So strong aftermarket, private jet good, OEM and retrofit lagging behind still. We gave a forecast for the fourth quarter, where we say we will be between 65 and 70 million. That's a year-to-year increase on 62 to 75%. And this quarter-to-quarter result we expect to be driven by private jet picking up even a little bit more, and partly offset by the aftermarket consolidating a little bit after a really, really strong quarter in Q3. So if we look a little bit ahead then, I think it was really interesting to see all the quarterly reports from the airlines, also from Airbus and Boeing and a few others, everybody being very, very positive about the market. And I think this means that CTT is in a very strong position to continue to grow in all our segments. As I said, the airlines reported very strong demand for air travel, and it continues like that. I think it's fantastic to see that Lufthansa already paid back all the money they borrowed to survive during the pandemic. Those money are paid back. All the American airlines are really bullish, to use their own words, on the market and how they see the future. And also the low-cost airlines in Europe is picking up and bouncing back, and also foresee a strong demand for travel. So this is very comforting for us. But we are, of course, a little bit cautious. How will the economy hit people and their will to travel? And that's something we will see further on. But right now it looks good. Everybody's reporting good, and we're actually paying more for traveling than we did before the pandemic. I think I'll come back to a little bit later, but the only most risky part we see is the retrofit market, where that can easily be affected by financial impact if travel goes down a little bit. As I said, and also Boeing projects then that the air traffic expected to return in 2023 to 2024 to the pre-pandemic levels. Right now we're on 74.2%. It picked up a little bit from September even, so it continues to go up. I think it's also important to know that the commercial airplane demand remains very strong. Boeing and Airbus, they are struggling to deliver aircraft to cover the demand from the market, and it's mostly due to supply chain constraints, which continues to challenge the industry in a very strong way. I think interesting in this chart is to see that how much recovery there is left in Asia. Asia Pacific, they're still very weak, and of course you all know that China is still closed, and they are a big part of the international travel, and especially the international and intercontinental travel coming in from the US to Asia Pacific and from Europe to Asia Pacific and back. That has a lot of recovery left. Other areas of the world are more in phase in what it was before the pandemic. Aftermarket, as I said, really strong, and as you see from a CTT point of view, we're already above the levels that we were before the pandemic. This is of course due to there is more systems on the market. They are flying not as much as before, but there's more systems, and that's really shown in our figures. Then, as I said, Boeing has all these aircraft to deliver. I think they're down to 100 now, and that's a 10% population growth for us. So we see that the aftermarket will continue to grow, not as much as in the past. It will be more steady. Asia Pacific will recover, and then we will add systems to the market, which will help us keep growing the aftermarket. If we look at the OEMs, Boeing back on track, 1 to 2 aircraft per month. They will gradually increase to 5 aircraft during next year, and they will also continue to deliver those stored aircrafts. And in total, Boeing predicts to deliver 70 to 80 787s during next year. So that's quite a substantial growth. Airbus currently targeting to increase their delivery rate to 6 aircraft per year, and I think they will succeed in that. And then 777X, which is the last wide-body platform that we are on, they will deliver their first aircraft to their customers in 2025, but we will start delivering our systems during the first half of next year. So the production line is going on, but on a low rate to start with. On the picture is Lufthansa's first 787. We are super happy with having Lufthansa back with our systems. They have humidification both in crew rest and on a flight deck. And then, as we announced, Airbus has confirmed that they have a customer on A350 with a selected 6 humidifiers per aircraft, both for first and business class, which is a really important step for us. That's the selection. We have it not on order yet, so that's why we're announcing it a little bit like that. But it's really a big step for us having this in both first and business. If that's a good picture, anti-condensation retrofit is maybe a little bit more troublesome. We are on a very low level. We actually didn't have any retrofits on anti-condensation this year, and that's not where we want to be. The future is not as bad as it looks right now. We have quite a good prospect list, and I think it's really driven by sustainability right now, which is a topic for every airline. They start with modifying their fleets, getting new engines, cutting down the fuel burn with like 20% or something like that, but they will continue to fight to lower fuel burn, CO2 emissions, to be more and more sustainable, and that's where we come in to take away a few more percentages. And we have our old customers, so to say, with Jet2, Transavia getting new aircrafts. They are very interested. We are in dialogue with them, and here is again coming back to the demand for aircraft. They really need those aircrafts, and they really have to find a slot where they can put them on the ground for a couple of days to put our systems in, and that's their fight. They need a production capacity. They want our systems, and we're trying to juggle this with them to make this fit. So I'm positive over time on this market. It's not happening right now, but we're in a good position to get back to where we were and then start growing from that position. But let's see how the financial impacts are playing out as well. It needs for the airlines to keep making money, otherwise they will not do this. Cabin humidification retrofit. Here I think as well, we were in a super good position when pandemic started and everything was put on ice. Now it's picking up again. It's a little bit slower than I thought maybe. The airlines really need to come back into profitable situation. But now they are starting their upgrade programs, and as you know, well-being, health is really top of the line on everybody's mind. So humidification is really helping there, and I think we're in a really good position to, during next year, finally get our first order on a retrofit for business class or first class. Private jet, we were projecting that Q3 would be good. It was good. We got some orders, but now in Q4 it will really increase from past levels, and I see that will continue into next year. And we also see that this is very good. We're live here now with people in the room, and that's the same for us now. We've been to several exhibitions on the private jet market this year. We're starting with Geneva in April, and then going on to Orlando. We've been to ACJ Forum, we've been to the BBJ convention, we've been to Orlando, and right now my marketing team is down in Dubai for the Detta show as well. So this market is picking up, and it's strong even in a recession. We're also super happy with the Airbus ACJ 320 program. We have the kit, it's developed now, and we're installing it in several aircrafts, and it's really strongly promoted by Airbus, and we see that every order they get, we are part of that, and I think that will continue during next year and the coming years. We are right now in discussions with Boeing to see if we can take this concept on their BBJ for the 737 MAX program as well. We have started that dialogue, and hopefully we can continue with that and also come to an agreement with BBJ during next year and get this kit onto their aircraft as well. When it comes to the ACJ 220, the same positive way. Our development teams with all involved partners are working full speed. We're also in parallel delivering systems which are being installed in the completion center. And this first 220 aircraft will enter into service in 2023. And then it will continue, and it keeps picking up. ACJ is very positive for the 220 program, and we will be part of it. And they're really promoting our kits to be on their aircraft. And then the third opportunity in the business jet is the large cabin business jet. You already know that we are on the first Bombardier's 7500 aircraft. The completion center is now retrofitting the second aircraft. The customer is very happy. And I think that and also the ACJ220 program has really caught the attention of the other OEMs as well. So we are in dialogue now with Bombardier and Gulfstream to see how we could come onto their platforms, be part of their future, and we're also trying to talk with the customers and the owners of the business jets. So this market is really something we're looking into. Everything in aerospace takes a little bit of time, but I'm quite positive that we can cover this and not only be on the Global 7500 as a completion project. We should come into it as an OEM project and also as a kit STC delivery, and then come into the other platforms or OEMs as well. So with that, I'm already on my last slide. We had a super Q3. We foresee that the market will continue to grow, but the next few quarters will have a little bit lower currency-adjusted growth. OEM will pick up in 2023. The aftermarket a little bit flat the next couple of quarters, and then it will continue to grow with Asia kicking in, and also the population growth coming from more aircraft with our systems on the market. So we're in a very strong position to continue our growth journey. We're cautious about what will happen in the world, but very positive on the outlook. And then I hand over to you, Carl.
Thank you, Henrik. So the first question, mainly on the news you had here with Lufthansa on the A350. As you said, you haven't highlighted a concrete order, so to say, but for everyone's understanding, how do you see the kind of scope within Lufthansa?
Just a small, maybe confusing picture because it was a Lufthansa 787 on the picture, and then I had a remark on the A350, which was actually for another customer, which I'm not allowed to tell anybody who it is. But we can turn the question around to Lufthansa, which I think and that's why we had the picture. It's a really comeback for us to be on the Lufthansa aircraft again and seeing that they have our systems. Lufthansa is really promoting their products and also how they try to care about their people, because it's hard for them to get pilots, crew, cabin crew, mechanics and everything. And I think having our system in flight deck and in the crew rests are really something that is appreciated by the crew, and I think that's something that we hopefully can continue to work with Lufthansa. And as you've seen, they are growing and they're really strong again.
And if we look at kind of different airliners out there, one of the first customers within humidification was Asian, or were Asian customers with China Southern, if I'm not mistaken.
Yes.
So how do you foresee the demand picking up either with Asian airliners or the one from the Middle East, or now legacy carriers such as Lufthansa?
I think Middle East is really interesting. We're down there now again and having discussions. They're strong. Their market is back. They're again positioning themselves as the hub of the world, and they always try to be on top of the market, so to say. And there is where we come in. So we're working really hard to come in both on their new aircraft on selection and also on retrofit projects for the future. Then China is super interesting, but it's hard to say now. It's really, really low down there now. We read about problems, pilots leaving airlines because, if you fly 1 week, then you're in quarantine 3 weeks, and it's really tough life. But hopefully that can come back, and that's what's indicated later part of next year. And then, of course, the aftermarket will firstly come back, and then when they start picking up flights again, I think we can foresee a growth of systems as well. But right now we have very little contact with China for obvious reasons.
And then the undisclosed customer you mentioned, but they still selected 6 units on board, so to say. What's the latest you have heard here or been able to follow when it comes to increasing the penetration, so to say, especially on the 350?
Yeah, 350 is, I mean, that's where we really work on. That's a good question. We really work on increasing the penetration. It could be better, we think. And we need to have a tighter dialogue with Airbus to see what we can do to really support them in having their customers select us and try to get up to the levels which we have on the 787 program. How do we do that? We need to make the airlines interested, so they should ask for our products. They should understand how they can select them. And we need to also work with Airbus to see if we can further develop our concept together. And obvious for us is, wouldn't it be easier to have it as a standard? Then it's easy to produce, easy to install, price it in the right way, and then we should be able to increase the level there.
And on the standard part of equipment, you used to have the dehumidifier as a standard on the 787. What's the latest here? Have you seen customers ordering that as an option?
I mean, I think that's something that's going to be really interesting to see now, because I think there was a couple of aircraft that delivered before the stop of 787 program. So now is the first time that airlines get 787s without anti-condensation systems. And we are very curious, and we will be actively talking with airlines to see, do they get problems with wet blankets and stuff like that? Or does it, as Boeing said, actually work, which we don't think, but we'll have to see. And I mean, Boeing is the OEM, so we take their call as granted. And then if they have problems, I mean, then we'll need to convince them to put it back on as a standard, or at least as an option, or help the airlines retrofit the system in.
And then on the private jet segment, where you are already today present in certain models, and you expect private jet deliveries to pick up now in the near term. But could you shed some further light on how these manufacturers think, or the production rates within the private jet market, how this could ramp up?
So if you look at the wide body, I think it's coming back to where it were before the pandemic, and it looks really strong. Then, as I said, there is a big demand for aircraft, which means, I mean, the private jets, that's the same aircraft that come off the line from Boeing and Airbus, and then they go to BBJ or ACJ. So I think they could sell more if they just had more aircraft. So that's a really strong market. And then the big business jets are also very strong demand-wise. Actually, a little bit the same problem for ACJ on the 220, very popular. So I think they will, every aircraft they can sell, they will sell, and we will be on it. And then I really need to get into the global 7,500 platforms, the largest Gulfstream, and maybe after that going a little bit lower down, and then we really can increase our volumes. But it's going to take some time.
And then on the installed base continued to grow during the pandemic, and now we have perhaps the last leg of the intercontinental air traffic still yet to recover. But what you highlighted there with the airliners still saying that demand is quite good. How should we think about, maybe people overspending this year, and that travel could perhaps decline next year as a result of that?
That's the good question, which I don't know what to answer. But I mean, that's what we're preparing for, both ways. Either it keeps picking up, or it declines a little bit, and that will of course affect retrofits and stuff like that. So we will try to have to be flexible and really work on the market that are picking up, and maybe go a little bit slower on where it slows down, if it slows down. And it's very local as well. That's what I'm noticing. It's US is one game, Europe is another game, and Asia Pacific will, I mean, they're behind us, but will pick up.
But still, this should be perhaps more similar to a standard downturn year in the air travel industry historically, because the pandemic was, of course, total mobility restrictions, so no aircraft flew. So your aftermarket business should still be quite resilient next year.
We think it's very resilient, and it will grow with all the intercontinental travel coming back, and then it will continue to grow with the systems we put on the market. So we're very positive on the aftermarket.
Good. And then just my final one. You said so yourself that the share of aftermarket revenues was very strong, the dollar as well, but still, as you wrote in the report, even excluding the dollar, it was a 35% margin or something. So how do you think about the profitability into next year? I mean, aftermarket should still be quite high.
No, I mean, we never give any forecast on profitability, but I mean, I've said it before, we actually would like to come down a little bit on profitability, which would mean that we sell more systems with a lower margin than on the aftermarket, and that's what we're really fighting now to keep growing the aftermarket as the market grows, but we need to come back with OEM sales. We need to do retrofits, and then our margins will drop down a little bit.
With that marks the first presentation of the day. Thank you everyone for listening.
Thank you.
Good morning and welcome to this presentation with Beijer Alma. My name is Sandra Nordlöf and I am an equity analyst here at ABG. And with us here today we have Henrik Perbeck, President and CEO of Beijer Alma. Welcome and feel free to begin your presentation.
Thank you very much. It's great to be here and see everybody live again. I would also like to take the opportunity to present our CFO, Johan Duvemark, who is here with me today. Due to the format of today, I will do most of the presentation, but if we have any more detailed questions, Johan will jump in on that as well. So, we have about 20 minutes. I will try and give you a short overview of the Beijer Alma Group. I will also go in a little bit more on our key subsidiaries. This is, where our business is happening, and very important if you follow Beijer Alma on the market quarter on quarter. Also, I would like to touch upon our acquisition strategy, and if we have time, maybe some words just on the recent developments in the latest quarter. So, Beijer Alma is an industrial listed group, and our concept is really to acquire and own long-term industrial companies, which have a growth potential for the long term. Our subsidiaries, which we also report to the market, currently are Lesjöfors, which is a global spring manufacturer, and Beijer Tech, which is industrial trading and manufacturing in various industrial niches, mainly on the Nordic market. However, I also want to point out that until a couple of weeks ago, our third subsidiary was Habia Cable, which we divested in October this year. So it's actually been quite a change for our group over the last year, which I will come into further during the presentation. So, very high level, Beijer Alma has been around since the 80s and on the market, stock market. We have a strong main owner, which is Anders Wall and family and foundations. And they hold 25% of the capital and more than the majority of the votes. But most of all, the institutional owners are the investor base, with more than 60% of the capital, typically Nordic mutual or pension funds, and some international, of course, as well. But I'm also very happy to say that we have 10,000 private investors that are very engaged, and we meet every year in Uppsala for a big event when we in our annual meeting. So you're all very welcome to become private investors as well. So Beijer Alma, our role is really to be an active owner of our companies. And for that, we believe in having a strong financial position so we can support them in their plans. And also a really long-term commitment to developing their business. And more specifically, we also work and support our companies with acquisitions. And we have on Beijer Alma level resources focused in particular on acquisitions. But fundamentally, it's a very decentralized governance model. We really believe in that the local companies have the empowerment to make their decisions. This goes not only in our relationship to our main subsidiaries, Lesjöfors and Beijer Tech, but also within these companies. They are, in fact, a group of companies. Being really the managing director of a spring company in somewhere in Asia or Europe you are really the MD managing your whole company. So this is really fundamental how we work. Acquisitions have always been a part of the group's strategy, but I will come back to a little bit later that we have tried to increase this over the last years. And just finally on this page, the split, Habia Cable used to be around 15% of our group. And now, since in the third quarter, without Habia, Beijer Tech is about 30% and Lesjöfors about 70% of our group. So over the years, here's the last decade, you can see a steady performance of growth. But what is most important for us is profitable growth, growing our profit base. So we've kept steady margins, as you can see on the blue line. Here you can also see what happened now when we divested Habia Cable. So despite of that, we're still up a little bit versus last year. We think we're operating on a healthy margin level, so we're really looking for more opportunities to grow with that range, but of course, always protecting our bottom line, which is the key value creation for our shareholders. It is a global group, of course, with an emphasis with the main part in the Nordics and Europe. This is actually including Habia. We will have a little bit less of Asia and a little bit more of the US when we update this for the next year. But main business Nordics, Europe, but also a good footprint in Asia and growing in North America. In terms of our customer base, the key point I want to make with this is actually it's very diversified. So you don't have to read everything that's on the left-hand side. But we are really exposed to a number of industrial segments out there. And this is what is the strength also. So we're not just versus one industrial sector. We have quite a footprint I will come into on the automotive aftermarket, meaning replacement parts, but not so much to the OEM. But rest of that, there is a wide range here. As you can see, it's anything from machinery to construction equipment to medical and quite a broad base. Some of them, telecom, defense, oil and gas, and nuclear, will be significantly less going forward because that was some of Habia's key segments. And typically, we have very long-term customer relations. We are manufacturing components, and they are putting into their final products, which could be machinery, which could be some kind of vehicle. And our customers are typically leading in their markets. So it's not, but some kind of correlation to the industrial cycle, certainly, but not specifically to individual end markets. And that's been really a strength during these last several years. That has been indeed quite turbulent. In terms of sustainability, we are focusing in the 4 areas where we think is most important for our business model and where we really can have an impact. We have a very strong focus on business ethics and anti-corruption wherever we are working in the world. We have the highest standards in terms of how we deal with our customers and suppliers. Resources, we do use, of course, a lot of resources. It's mainly metals and electricity or energy. So we're working constantly to improve both of course, the energy efficiency, but also how we work in a more circular model with waste. And then, of course, climate impact, which has a lot to do with the energy mix and what we can impact. But we're also looking proactively to work with our suppliers on finding in the next horizon now with more, especially metals, is going to be a big question for the climate impact. And finally, and most importantly, wherever we have our operations, we have 50 factories around the world. There's a high focus on our employee safety and to make sure that we have highly motivated co-workers. A lot of our staff in the factories are highly skilled, so it's really important for us to create an environment where they stay with us for a long time, which they tend to do, which is great. So a few words on our 2 main subsidiaries, which is indeed important to understand if you're going to follow our group. So I start on the left with Lesjöfors, our global manufacturer of springs and also wire forms and flat strip components. Most of the business is what in the business areas you can see industrial segment, which is almost 80%. That is typically customized products where we, together with our customer, we develop a new component for it can be during a month or up to a year to create a component that they put into their final product, and then we live together it can be for 5 years, it can be for 15 years, as long as that product is successful on the market. And as I said, it can be a piece of machinery, it can be a chainsaw, it can be some interior. There are springs everywhere. And actually, the nature of a spring is that typically It's a very important little component that you want to have good quality, and if it breaks, it normally the functionality will break completely. So it's an interesting, small but important part of many products out there. So that's the main part, and this is really quite a global business. As I said, we're in the US, we're in Asia, and of course, strong footprint in Europe and Nordics. The other business area is actually something completely different from a business model point of view. It's called chassis springs, and it is actually what car replacement parts. When you think of a car spring or a suspension spring for a car, it's exactly that. But it's not sold to the manufacturer, only on what we call the free or independent aftermarket. And here we have a very strong market share in the European market, almost 50%. And it's thousands and thousands of different products that are kept on stock, distributed through our main warehouses in Europe in a couple of hours across Europe. So that is quite a unique market position that we've built up through the years, and it fits very well to our flexible production schedule because we're keeping stock of thousands and thousands of different articles across Europe. I should also mention here that we have or had 4 main distribution centers. It's Sweden, in Växjö, we have in the UK and in Germany, and our 4th distribution center was in Moscow, in Russia. So in the beginning of this year, we decided to ramp down that operation completely. And this is something that if you see looking at our numbers, you will have an impact for the year following that. Out of the chassis spring business area, the Russian market was about 15%. So, but overall, of the whole Beijer Alma, it's about 3%. But it still had, for this business area, it did have an impact indeed, both on the, of course, the top line, but also the bottom line, because the impact was very sudden when you suddenly overnight decide to, stop a business. So this is something we dealt with mainly in the second quarter, but of course we will see throughout the year the repercussions from that. So Lesjöfors is now one of the leading spring manufacturers in the world with a turnover of almost 4 billion Swedish kronor and a good profitability of around 16% in the on average last 12 months, and some 40 manufacturing sites around the world, and further some sales companies. So it's quite an impressive group of companies, and as I will come back to, we're adding new and more companies through acquisitions to the Lesjöfors group. So that's our main holding, of course. However, Beijer Tech is also very interesting because Beijer Tech came into our group some 12 years ago as mainly industrial trading, but over the years we have really tried to also move into more to manufacturing. Also various components, but also on the Nordic market, we act as agent for some of the world-leading suppliers of machinery and consumables for the Nordic industrial companies. But it's also a platform for acquisitions into new industrial niches. So here we have a little bit more open agenda in terms of what kind of companies we can bring into our group. And one niche that we went in recently, like 2 years ago, is building automation, where you create a solution for commercial buildings and advanced buildings such as hospitals for energy and air quality, for example. Another important part, one of the business areas of Beijer Tech is fluid technology, where we have one of the leading traders in the Nordic market, and we're building on. We have fire hose production and the valves, etc. on top of that. So now Beijer Tech has a turnover of 1.7 billion kronor, which is significantly more than a few years ago, and also a very healthy margin of around 11%. So those are our key, and I've also already touched a little bit on how we grow also through acquisition. So, and this has, as I said, it's always been a part of our main strategy to create profitable growth through, of course, in the daily business, it's organic growth always comes first. We're supporting a lot our companies with making new investments into it could be new machinery, it can be new facilities. But the acquisition part has been increasing in importance for us also, because we think we can really add value to the group this way. So what kind of companies are we looking for? Well, the types are typically, the first one is complementary or add-on acquisitions into Lesjöfors and Beijer Tech. As I mentioned, in Lesjöfors, we can, if we acquire a company in a new market, it can be a geographical expansion, it could be the product dimension, or certain customer segments that we prioritize highly. And the same way in Beijer Tech, for example, in the fluid technology area, we also add-on acquisitions. But as I mentioned, we also enter into brand new niches, that are companies that are a little bit too small to be a Beijer Alma holding from the start, maybe have a turnover of 350 or 200 million kronor, and they will come into Beijer Tech, and they will grow there in the domains of Beijer Tech meanwhile. And we are also looking for major portfolio acquisitions in the Nordic market, but our key activities are related to the complementary acquisitions. How do we find new companies? Well, we work a lot proactively through our local mansions. We have more than 50 companies around the world, and all our key employees are encouraged to come with good ideas. What could be a good complementary acquisition and come into our group? Of course, we also work with screening, and especially in the new areas, it is also we are getting a lot of proposals from brokers and in investment banks. So a couple of years ago, I said we wanted to remain around 50-50 between what is coming to us and what we're sort of finding ourselves, and I think this is almost exactly where we are now in that balance. And there are some pros and cons. If you acquire a company that has proposed by a broker, it's prepared for sale, so there's a more, in a way, more smooth process. Whereas if you have established a relationship with an owner, or maybe also the active management, it can take several years before you have an acquisition. But on the other hand, hopefully you have a bilateral discussion without any other competitors. What are we looking for? Well, we're always looking for high customer value, whether it's manufacturing or trading. It's really important that we can clearly see why the customer is prepared to pay for the product, so to say. We like when we see international opportunities and that we can support our companies with. Some kind of strong market position. Either it can be, a region of Sweden where they're very strong, or it can also be a niche, global niche, with strong market for. So some kind of, so that you're leading the development in your market, and not the least. And this comes back to what I said before: a very diversified customer and preferably supplier based. Especially the customer base is very important. We see many small companies that are very in the hands of one big customer or two, and we really want to make sure they have a stable base of good customers that to work and develop. So what have we done? Well, I think we have managed to increase this. If you look before 2018, we made about one acquisition per year. We got up a little bit the speed, and then we had some impact from the COVID in 2020. But since now we're progressing and actually adding significant value, both in terms of, this is the top line, of course, with our turnover, but most importantly, also our profit base is growing. I thought I would give you one example, which we thought was very exciting. We acquired in the US this summer, John Evans' Son, which is the oldest spring manufacturer in the US. They made their first spring in 1850, and as a fun fact, Lesjöfors made their first spring in 1852. So it's actually 2 years older than Lesjöfors in itself. But that in itself is not so important. But it's an excellent company. We managed to meet in our contacts in the US. Came from, have been owned by a few families, and they really ticked a lot of boxes for us. But first of all, we do have an agenda to grow more in North America. We're very heavy in Europe, as you saw before. Also, they were very strong in one of our key customer segments, which is the medical technologies, where they're supplying springs. It was really the right kind of customer portfolio. And thirdly, they also brought some product technologies that we did not have in-house, a type of springs called constant force springs. And this is something also we hope to leverage more on the European markets. And we typically work a lot with cross-sales opportunities between our companies. When they come into our group, we want them to be able to sell the whole offering of Lesjöfors and vice versa, that we can take their technologies to our other companies and promote cross-sale. So with this, we have now doubled. We also made an acquisition in the US exactly a year ago. So we have now doubled our presence in the US for the last 11, 12 months. And we're becoming a significant player on the North American markets as well. So this is a good example of an add-on acquisition. Somewhat larger than our normal acquisitions. This is actually, value-wise, it was about the same size as our Habia divestiture. So quite significant for our group. And finally, just a short comment. As I mentioned, we do own our companies for the long term. Habia we did own since 1985. Looking, however, are we really the best long-term owner? We thought Habia could develop further together with another industrial player in the cable business. So it was divested to HEW Cable. And of course, the key for us was really to create resources to support our two main tracks of investments, which are within Lesjöfors and also within Beijer Tech. So, and as I said, the sale of Habia was announced about the same time as the acquisition of John Evans' Son. So in a way, we made a kind of industrial capital reallocation over a couple of weeks this summer. So we really see more opportunities in these two areas where we're most active right now. So I think our time is running. I will just give you a very short comment on a high level. Where are we at right now? We can see, we do still see some growth in the industrial markets. It's not as bad as you read sometimes in media out there. It's good activity levels overall. It's varied, you could say. We have a couple of segments, such as the automotive aftermarket, which is a little bit slower, whereas Nordic, American industrial segments are still seeing a good demand picture. Asia, somewhat hampered in China of the what should we call the COVID situation there, which has subdued the demand somehow. But let's see how that develops. Of course, over the last year, we worked a lot with price increases and the cost. Initially, it was a lot driven by raw material. Now, recently, of course, it's more general inflation. So this is something that's on the highest of our agenda all the time to protect our margins. And after the John Evans' Son, we also acquired another spring manufacturer in Turkey, which is a very good company that we think will be an interesting expansion of our production platform, having a little bit closer low-cost production. So that's on a very high level. Now I think if I should give you a chance, then you should do it.
Thank you for your presentation, and maybe we do have some time for some questions. So let's just start off where we're at, more or less, with the inflation and cost increases. And you mentioned that you have been able to offset this with price increases. How does this look forward? What are your abilities to adjust prices moving forward, given that the cost base continues to increase?
Yeah, so one of the key drivers for us in the last, it's actually more than a year, it's been going on for almost 18 months, I would say, has been the raw material impact, of course, with metals, not the least. And this we have over the last year has been a very, how should we say, it's never easy, but it has been very understandable to push on price increases if you are, in the industrial supply chain. So I think this was done Already a year ago, we could start doing that, and we have done that. What is new now is, of course, more the general inflation, and I would say it's in general it's getting a little bit tougher. With these are customers we've been working with for many years, and we have respect for each other. So it will continue, of course, based on inflation, but it's the period where the extreme fluctuation in the raw material is probably over, and we can see on the commodity markets it's going down, of course, already, and not quite on our type of steel, but it continues to be our focus, but I don't expect as drastic changes.
Okay. Thank you. Also, you have acquired John Evans' Sons in America, which is increasing your sales there significantly. How do you look at the American market looking forward? Is it very different from the European market, or how are your strategy?
That's a good question. We, as I mentioned, we have seen Nordic and US markets being the strongest over the last couple of months. I was actually in the US last week and talked to our colleagues a lot about this. And yes, I would say they don't see a strong downturn coming in the same way as maybe the sentiment is more in Europe, which we haven't actually seen such a strong downturn. But I think the US market is more of a classic. There, the inflation is really demand-driven. It's high activity. It's one of the key challenges is actually to find good, skilled labor for our companies and others. So I think it's a good activity level, and I'm not seeing such big, drastic changes in the U.S. market.
Okay. And continuing on the acquisitions, you mentioned that you have increased your number of acquisitions per year. What are the outlooks? You mentioned how you try to find the companies, but what is the pipeline right now and your plans looking forward?
I think the pipeline is absolutely decent. What we're doing is really to balance, in terms of what what resources we have and what kind of companies we want to acquire. So of course, if we do run into a slower 2023, we're going to be very selective of what we acquire. But certainly our main strategic directions in finding good add-on acquisitions for Lesjöfors will remain, and also in Beijer Tech, if there is a new interesting area, we will definitely go in there. We have done, we have done two of the two largest acquisitions in the group's history. We did within 12 months, actually in the summer of 21 and summer of 22. So in that sense, we have really added a lot to the group. But we will continue, and the pipeline is looking fine. But of course, we have to be careful. It's a lot of people. Companies are showing strong earnings from 2021, and you have to look at how are they going to perform over the next couple of years. So
yeah, okay, perfect. I think time is starting to run up. So we thank you very much for coming here, and also to everyone who listened. Thank you.
Thank you very much.
Hi and welcome again. My name is Gonzalo Artiach and I'm a healthcare equity analyst here at ABG. Our next company is Inga, a diagnostics company focused on infectious diseases. And with us, we have here today the CEO, Jonas Jarvius. Jonas, the floor is yours.
Thank you very much. Also, my apologies for not being able to attend the Haymarket today. I would really have loved to, but we have so many meetings coming up in the afternoon, so we'll have to do it over link. But happy to be here. Thank you very much for that. I think we can move into the next slide immediately, where we have our disclaimer slide, of course, in case me or my colleague Anders Lundin will make any forward-looking statements. When you have read that now, I suggest we move in and look at some of the highlights of Inga. So we can take the next slide here. Thank you. So we are based in Uppsala, so not too far from Stockholm. We are focused at developing disruptive and improved infectious disease diagnostics tools. ASTar, our main product, as you can see to the right, is CE marked. We as a company, our CE-IVD, are approved, meaning that we can continue to develop products under the new regulation. So we are a little bit over 117 employees and consultants currently in the company. We are currently in an active phase of revising our go-to-market strategy. I'll come back to that a little bit in my presentation. But if you look at ASTar, really, we have now, as I said, been on the European market for more or less a year. We're ramping up that market. We have filed for the FDA for our access to the US market. And we also received the breakthrough device designation by the FDA, which is really, of course, a very high quality stamp and shows the importance of our technology for US customers. And as I mentioned, we are now fully IVDR certified. One of very few companies actually in Europe that has actually met that timeline. And we also are in discussions with our next product in development, but today's focus will really be on ASTar. So if we take a look at the next slide. When we think about the problems we want to solve, well, bloodstream infections, where sepsis is the most severe condition, is our number one problem for blood analysis. Sepsis is a huge problem. Every third person that will die in our hospital will die from sepsis. And even if you combine our most common cancer forms, you still see a higher death rate in sepsis. So this is not a minor problem, it's an actually huge problem. And diagnostic really comes into the picture where we can see today that we start therapy, but the current diagnostic workflow will take too long. And that actually means that a lot of patients will have died, passed away until you receive the results. So providing faster active results in sepsis care is of key importance. If we take a look at the next slide. So as I mentioned, of course, sepsis being the first application, but as a part of what we do, we of course want to contribute to minimize antimicrobial resistant development. This is something that has escalated clearly over the last, I would say, 10 to 20 years, but we see that common bacteria become more and more resistant, become more and more difficult to treat, and it has been presented as the biggest threat to mankind. So this is no small feat, and of course, Inga will not solve this piece of the puzzle, but to provide accurate diagnostic indications, what drug to use, can really help in reducing AMR. And I think this is very important. If we then move into the next slide, of course, what we do is to serve a market. And this is a market with a very big unmet need. So overall, when we look at it, we see a multi-billion-dollar addressable market, more or less $1 billion addressable market only for blood. But ASTar was designed really from day one to be a platform. So yes, the first application is for blood analysis, but we have already demonstrated use for isolate, which is a huge market, some 90 million tests, Europe and US. We have also demonstrated urinary tract test analysis. So we really see it as a platform that can grow with the increasing demands in the market and can, of course, attract newer tests to that platform. So if we take the next slide, we have seen that it's a huge market. And really, what's the problem we want to address? Well, you can see it on this picture here. The top part really illustrates the traditional diagnostic workflow for septic patients. And without going into any details, you can see it's a multi-day, multi-step process. But the big problem is that it takes typically 3 or 4 days before you get the results. And what is the result then? Yes, it is what antibiotic should I use to treat this patient's infection with? And at this time, around 20% of the patients you started on diagnostic therapy have died. They passed away. So this is what we want to help with ASTar, is to provide that actionable results up to 48 hours faster. And not only doing that, we also want to ease on the work burden for the people in the lab. So it takes just around 2 minutes to start the test. And if you compare that with the top part where you have multiple interactions with multiple instruments over a several day period. So it's ease of use for the lab and of course a better outcome for the patients. So if we then take a look at what the meaning of this could actually be. If we see the next slide coming up, we can look at, these are our 3 independent health economic studies that has shown the benefit of 24-hour faster diagnostic. And from left to right, you can see that a dramatic reduction in mortality because the treatment then actually works. Of course, less pressure for these opportunistic superinfections, where you can see a lot of that in the lab, and also common infections, because you don't have to treat broad. And I think for the hospital, the biggest driver perhaps is that this study in particular shown that you could save on average 2 days in the intensive care beds, and 2 days in the most expensive beds, where you have also typically quite a few of them, is a huge cost saving. So I think all this is good support, but everyone, of course, want to know how do ASTar perform in this. So we are now coming very close to start our first multicentric study in the southern part of Europe. So of course, that's going to be interesting to be able to announce start of the study and then, of course, coming back with the results during next year. But that's the overall effects. If we take the next slide, of course, I mean, a lot of you have probably have a friend, relative that has been developing sepsis. So this is just one patient case. It's a 64-year-old gentleman who had surgery. He went on empiric therapy. He developed sepsis after that surgery treatment, and he was set on pip/tazo. That's a combinatorial, very common drug combination for septic patients. And what you can see on the lower part is all the timestamps, what happened in this in his case. You could see in the morning you had a gram stain indicating bacteria in the blood. You can indicate what type of bacteria. It was a gram negative. And you could see that early the next day, you had a positive sample. So you could then immediately, of course, load it into ASTar. And if you take the next slide, you can also see that ASTar could, during the same day that the sample came in the morning, it could provide results on 13 more antibiotics. It could also tell you that pip/tazo was not an ideal therapy for this patient and could suggest alternative treatment regimes. The hospital immediately shifted therapy and the patient had a very positive outcome. The hospital themselves made the assessment that if they had not had the possibility to act so fast, it's a very high likelihood that this man would have died the next day. So this case, it was 18 hours faster, but it truly demonstrates that from a personal plane, it's not just health economic. These are individuals that can benefit from faster diagnostics. So if we take the next slide, we see here that who are then the companies trying to address this market? Well, the way we look at it, we basically see 4 companies in the market that either work with fully automated solutions or semi-automated solution. And semi-automated means that you have to do a little bit more hands-on time in the lab. But what we now have seen ASTar performing, we can see that it's the only platform that combines the full automation, very simple to use, with random access, with a high throughput, and also combining fastidious and non-fastidious bacteria. And we also do that with the broadest platform of antibiotics and concentration ranges of all companies in the field. So I think that we have developed a very good and very strong system, and it's going to be interesting now to see us coming more closely to market and see how that develops. If we take a look at the next slide, of course, these are the 4 pillars that we designed ASTar around. We did it together with hospitals on many years, and it was really ease of use, fast, comprehensive, and accurate. And I think the comprehensive part here is really a game changer. And what we mean with comprehensive is really that if you have a broad panel, the likelihood that you can actually act upon the result or a patient sample that you load in ASTar is high if you have a broad panel. So if we look at these 4 pillars and then see how has it actually turned out? Well, we can take a look at the next slide. So this is just what we now see customers running ASTar or in trials. And we can see that super simple to use. We can really have our staff doing other things. And also, I think the most impressive part here is summary from 2 studies. And the lowest number we have seen so far, of course, these are not many hospitals, but in 95.4% of everything that you loaded on ASTar, you could act upon that. That's a very high number. So really, I mean, what we set out to do in the comprehensiveness of the panel really starts to demonstrate its value. If we then look at the next slide, this is the ease of use. I mean, we designed it to be less than 2 minutes, very simple interaction. You're guided by the graphical user interface on ASTar, and it's seamlessly integrated in the current lab flow. You don't really have to do anything else. You just spend a couple of minutes on ASTar, and then you can leave it. So very simple to use. If you take the next slide, we can also see that high throughput is, of course, important. We designed ASTar for medium-sized and up hospitals, so typically serving 500 beds and more. And this, of course, means that you can, in the morning, load a lot of samples. If you're a daytime lab, take care of the peak in the morning. And if you're sort of a larger lab, you can have a high sustained throughput with random access. And we've also designed our consumables to be able to address fully automated mode, which we do now for sepsis, but then also be able to run semi-automated for, let's say, less time-critical samples, and then you only load the disk. So this is under development, but it also means that the same system can address full automation at one price point, semi-automation at a very different price point. So even there, we have built the system to be able to have a broad capabilities for sample types and workflows. But then take a look at the next slide. I think this is, of course, the performance data of ASTar. And as you can see to the left, this is just data from our clinical study. We are well above guidelines in Europe and US. And you can see to the right that our ranges, I mean, in what concentration range can you determine the susceptibility of bacteria? Because some case you have a native wild type, so a friendly E. coli, then you should treat that with a low concentration. But you could also have a super resistant, multi-drug resistant E. coli or ESBL bacteria, which require very, very higher concentration. It could still be the same drug, but if you have this broad concentration range, you can adjust therapy, PK/PD measurements adjustment for, let's say, the friendly E. coli that still can have a patient being killed in sepsis, and the most severe ones. And this is really one of our strengths in the panel. If we then move on to the next slide, we can also see that we have been building Q-linea for a long period of time. And we have been doing that together with customers. And we have really spent time in the hospital trying to identify what are the problems in the workflow. And we have now focused on ASTar, as you can see to your right, for rapid AST. But we have also identified that the transportation of these samples from the patient to the lab takes a long time, over 12 hours sometime. And the goal is to be beneath 2 hours, at least in the US. So that's where Podler come in, and that's really bringing point of care capabilities for sepsis diagnostics to the bedside. You actually utilize the workflow in transportation for the diagnostics. So it doesn't really change workflow for the lab or for the staff, but you can use time instead of waste time. We also have capabilities in the middle here with our multiplexed ID technology. This is nothing we are developing right now. We have demonstrated an absolute, I would say, world-class performance in highly multiplexed ID analysis direct from venous blood, so not requiring a blood culture. And this could be the next disruptive steps in 7 to 10 years, and we have the technology to take us there. But to the right, we have AST, and of course, ASTar being our lead product, what we are really promoting now. But we have also demonstrated that we can use the same technology as we have in ASTar for rapid point-of-care diagnostics. So we have done that for urinary tract samples within 45 minutes, providing a guideline on what to treat. So our sort of technology in the company have always been focused on developing in the workflow for the lab and for the patients, and it's covered by 24 patent families. So it's a broad coverage. I think if you take the next slide, we'll see a highlight on ASTar, and this is, of course, our key focus. That's where we now put a lot of our efforts. If we take the next slide, of course, this means that we want to contribute to the world. And I said I'm going to talk a little bit our go-to-market strategy, and I will do that to this slide. As some of you have heard, maybe all of you, is what we ended our partnership with Thermo Fisher Scientific just a couple of months ago. And what we are doing right now is, of course, implementing our new go-to-market strategy. And that will be a mix. We do want to focus to have Q-linea incorporated in the US. We have a foothold in the US. We already have employees over the last year to support in clinical studies. We want to extend that reach because US is really our key market. But of course, we are not going to look at sort of taking on the entire world. We are now in discussions with distributors, and we are looking at discussions for high-level, sort of broader distributors, but also more regional distributors. And really, our goal is to find the best solution, either for a country or for a region. And we are now moving and making good progress in those discussions. What we also have learned is that our last year in Europe, we saw that it's a very long sales cycle. Rapid AST is very new in Europe compared to the US, where they actually have seen Rapid AST, and it's a much more mature market, which I would like to see us coming to that market and see benefit from that traction. But Europe is not there yet. We haven't seen Rapid AST. I mean, all the companies I basically presented are just approaching the European market. And we see that customers are asking a lot of questions. Can I try ASTar before I buy it? And of course, we have seen a number of evaluations, all positive. So we have received very good feedback. But then we are facing a long tender process. And of course, this is difficult because you, as well as I, would like to see much better traction in sales. And I think it will come because the key core is something that really has been positively received. But we also see, as I mentioned, we have a number of colleagues in the field that also want to do Rapid AST. And we see that there are a couple of labs that want to do an evaluation comparing our system with a DRAST system, for instance, or even with Cellux's Reveal system. So we are now also coming up in the late stage of having independent evaluation, which is, of course, important to cross-compare this platform and see what are the different pros and cons with them. So I think that we are, of course, doing a lot of work now implementing new go-to-market strategy. We're also having a lot of visits together with Thermo Fisher in the handover from customers or evaluation sites or just sort of sales prospects. So we probably need a couple of more months before we can really demonstrate and show you that new path forward. But I think the key here is that we have built a very strong system. We see that we have a huge unmet need, very few companies today addressing that need. So I think that if we look a little bit long term, I think we can see a very good development of our company and together with you, of course. So with that, I will actually pause and open up for some questions, giving a little bit more time for questions today, and I hope that's fine. Thank you very much.
Thank you very much, Jonas, for your presentation. And as you say, now we have time for a few questions. And keeping the discussion from the last part, I would like to start with a question on the termination of the deal with Thermo Fisher. As you have mentioned before, now you have two possible scenarios that are open in front of you. Either you continue on your own, your commercial growth, or you move with a new partner. And in the scenario where you move forward alone, I was wondering how difficult will it be to address new areas, for example, the US, as you were mentioning before. And you have said that you already have some employees there, but how much would you have to grow your infrastructure there, and how realistic is to target this market alone?
So first of all, sorry if I made that impression. We are not going to target the market alone. We are going to work with distributors in different geographies and different areas. So that's going to be an absolute requirement, and that's going to happen. And we are in those discussions. But what I think is a key for us now is also to extend our own commercial organization, primarily to the US, because it's such an important market. So we want to have our own foothold, but of course then also work together with distributors, because US is much more consolidated than Europe, for sure. It's one country, but it's a large country. So I think that's the strategy. I think the good part is also when you look at US, there's very good statistics on what hospitals are running a lot of blood culture samples, because there's statistics on everything. We also know who are the sweet spot for us. And if you look at sort of the top 100 first customers, we already know who they are. So even a sort of a moderate sales force of around 15 people can really start making a difference to those key accounts. But it will be a journey together with distributors. And as I said, we're looking at both sort of more specialists at some countries, for instance, but also regions. And we're also talking to much larger companies that really would like to see the entire US or entire world, for instance. So, and that's really where we are now trying to mitigate. So the answer is we will not go alone, but we have learned a lot during the time with Thermo Fisher because it was a partnership. So we had a mirror organization. We participated a lot in these discussions with customers. So in that sense, we have a running start. We just need to extend that reach.
Thank you. One of the questions that we have gotten from investors is, what is the impact in your P&L of the termination of this deal? Could we expect to see a negative impact in terms of instruments that Thermo Fisher had and were already perceived as sales coming back to you, so returned instruments in the next quarter?
I wouldn't say that you can see that as a negative impact for sure. But of course, what we're also sad is that during this transition period, we will need to see, we can't just take over a customer contract, for instance. That needs to be done in a negotiation. And so far, these negotiations are going well, but it needs to move in the right phase. So I don't see that type of impact. But of course, what's the difference now is that historically, we reported a sale when Thermo Fisher bought an instrument because they were our sort of customer. Now, of course, all sales will be reported when we sell it to an end customer, alternatively to a distributor. That could be similar in the size. So we might see a mix of sort of registration of sales over the next year.
Okay, thank you very much. I have a next question on Podler. I mean, this device fits quite nicely in your whole story. But so far, we don't know that much about the strategy behind the commercialization of this product. I was wondering if you could give us a little bit of color on this, and also what are the leads that you're planning to target? Is it hospitals, or would it be more like microbiology labs?
Right. So the first part is, of course, as we announced, that we enter discussions with Podler, and we are really looking at the go-to-market strategy with Podler, partnership or ourselves. Currently, of course, we are really revising that strategy because we know that we will now focus some part of our internal sales force. And of course, it's really a nice combination of Podler and Astar. You could think about bundle deals in the future. So we're currently revising really and say, what's the best way to move forward now? Is it to keep Podler and Astar completely separate in our discussions, as we have done in the past? Because, of course, we had Thermo Fisher for Astar. So we're now sort of having a revised go-to-market strategy for Podler in that sense. If you look at who will be our customers, I would say it's still the microbiology labs, because they will really see the benefits of the Podler in their workflow, meaning that instead of wasting time in the transport that's currently happening, they can just have a continuous diagnostic workflow. The true benefits of that will, of course, be the patients that could save huge amount of time of using transportation time for diagnostic workflow. But also for the lab, we see in the US a lot of hub and spoke arrangements, and you can think about a scenario where you have a number of Podlers coming into the central lab. Since Podler is fully autonomous, if you have a positive growth in one of the blood cultures, that will indicate that. So immediately when it arrives to the lab, you can do segmentation and prioritization, say we have 3 samples that are already positive. Let's put them directly into the workflow. The others can just be on the bench, incubate it, and you can really take them sort of when you have more time. So I think it will really help the hospitals prioritize the patient with the sort of the positive cultures.
Thank you. And one last question on Podler. Different regions have different healthcare structures. For example, the US is more centralized than Europe. Could we expect a larger and faster uptake of Podler in the US compared to Europe?
Yes, I mean, the way we look at it today, to be honest, is I think we're going to see a faster uptake for both Astar and Podler in the US. And also in the US, we tend to look a little bit more from a business sense, to be honest. So you can actually see that saving time in transport, increasing diagnostic sort of outcome is something that the hospital will benefit from. So we see that we have the same sort of transportation issues in Europe, but I would say that Europe is a highly likelihood to adopt that. We also see a lot of hub and spoke key hospitals in the US, so a large region. And of course, their Podler will have an even higher value than in some parts in Europe.
Jonas, I think we're running out of time. Thank you very much for Jonas' presentation. And
thank you very much as well, and nice to contribute, although not at the Haymarket. Sorry about that.
Hi, and welcome to this presentation with Tethys Oil. My name is Sandra Nordlöf, and I am an equity analyst here at ABG. With us here today, we have Stefan Pedersen, responsible for investor relations at Tethys Oil. Stefan, welcome here, and feel free to begin your presentation.
Thank you. Yes, like you just heard, my name is Stefan Pedersen, and I deal with investor relations at Tethys Oil. I'm standing in for Peter today because he had a situation with a cold, and we don't want to take any chances. So for everyone's pleasure, I'm here instead. To talk a little bit about who we are and what we do, we can say that we are a self-funded oil company, which basically means that we are debt-free. We create our value through production, and in the short term, and in the long term, we do it by exploration, appraisal activities. We do all of this in Oman, and you can sort of see how our business model looks down here below, where we start with exploration, and we go on, and then we do appraisal activities to later on development and production. We were founded in 2001, and you could say that our main operations has been going on since 2006, because since then we have been in Oman, where we make most of our production in blocks 3 and 4, or all of our production, basically speaking. But we're not going to get stuck on this. To many, we are looked upon as a dividends company. I will talk a little bit about why that is partly true and partly why it's not true as well. But as you can see, we have had a massive increase in the numbers of shareholders over the years. And just now on December 1st, we were also one of the most 100 traded companies on Nasdaq. So we have become more and more popular, even though the stock price perhaps doesn't show this as much as we would like. And on the dividend part, yeah, obviously, as you can see, since 2017 or 2018, we have had 2 kronor in regular dividend every year. And later on, we have also added our extraordinary distribution in terms of share redemption programs. In total, this has been, for the year, as you can see, over $20 million just this year. And then that, of course, does not include our share buyback programs. And since 2015, that was the first year of dividend, we have distributed over 1.2 billion Swedish kronor. So we are pretty pleased with that part, and I think in many ways that it almost speaks for itself. If you look in the total return, as you can see, in the past 2 years, and that's literally the past 2 years, it's been 70%. If we would, go a little bit further back in time, then it would be almost 100. So, historically speaking, at least, we can say that we think that we have been a pretty good investment. Our shareholders are, as you can see here, we don't have a lot of major institutions. That is perhaps, one could argue, a problem with the Swedish oil companies, that we tend not to get the big banks and stuff like that. But as you mentioned, we have increased by several thousand. I think we're some 40% number of shareholders up just this year, and we're somewhat happy with this, even though, obviously speaking, in some terms, we would like some bigger investors as well. But to get back to perhaps to the little bit more interesting parts, where are we in the world? Yeah, primarily we are doing our business in Oman, in the Arabian Peninsula. We have been here since 2006, and we have steadily increased our land area, at least. Our main production blocks are up here on 3 and 4, and our explorations blocks are here on 49, 58, and 56. And we're going to talk a little bit more about them in detail as we go along. Yeah, and like we said, main production is roughly here in the borders of 3 and 4. And so far, it has produced over 120 million barrels of oil for us. We still have quite a bit of exploration and appraisal activities in these blocks. So we are looking for on the future. We consider it quite promising. Currently, most of our own operations are conducted over here in 56 and 58, which are both very interesting exploration blocks. We have a number of leads and a number of interesting opportunities here. Right now, we are in which we will come to, actually. Let me talk a little bit just about what we have been doing in the recent months, and then we will look at how this fits into perhaps the bigger picture. This year, as I mentioned, especially the operations has been conducted on Block 56 and 58, and these are exploration activities. We have drilled a number of new exciting appraisal wells, and that is especially Aljumd 2, 3, and 4 on Block 56. And we are just about ready to start our test production on this block. I don't dare say an exact date for that, when it will start, but it is in the near future. On Block 58, we as well have a lot of exploration activities, especially regarding like seismic acquisition and interpretation. And we could put it like this, that these findings so far has increased the way we look at the block. Obviously, it's still slightly early days, but we are cautiously positive to what's happening here. On the production side, yeah, obviously, it hasn't been as good as we had hoped for in these past years. We're going to get a little bit more into this, but it has been a slight decline in production this year. And for the full year, we are now have guidance for 10,000 barrels. One of the key things that we have done over the year, obviously, is as well to, in different way, counteract this decreased production. In part, thanks obviously to high oil prices, our earnings are incredibly strong, and so is, I would argue, our cash flow as well, even though it might not look like it because we invest a lot of money. But so in a little bit more detail then about why we think this is a very interesting block on Block 56 is we have 2 areas here that we are primarily conducting in. We are further along in Aljumd, which to some is perhaps they wonder a little bit why, because we have actually put a higher figure on the central area. But generally speaking, this has just been the workflow that we're working with. The most exciting thing about this in the short term is obviously our appraisal program ongoing on the block. And we now have 3 wells. We are pretty much set to start test production on these wells. So, but there are still just a few minor, mostly regulatory and administration kind of things that is just tweaking on. But don't let that word frighten you. It's not a big thing, but it's just some paperwork basically that needs to be done. For the time being, we are still aiming at somewhere around the 700 barrels per day for this test production, at least initially. But again, we will see a little bit about where we end up here. Okay, and then production, which is obviously something that most people are concerned about, because basically this is where our income comes from. But what we can say is that, yeah, this year has not been exactly the way we would like it to be. It's been quite a lot lower. We guided for about 11,000 barrels per day at the start of the year, and now we are at approximately 10,000. And this is in part due to the lower investments we saw during the years of COVID, but also a decline in investments in the year previous to COVID as well. So, and now that the industry is sort of waking up again, we see a certain amount of bottlenecks in regards to getting equipment to get things going again, so to speak. So, and despite perhaps as what many people would hope for, it's not quite as easy as to just push a button and then get production ramped up. So it's an ongoing process. And obviously we have invested quite a lot this year in all of this. And perhaps the most significant part for the none too initiated is the fact that we just recently increased our number of drilling rigs from 3 to 4. So we are quite confident that we will be able to drill more new wells in the coming months. So but besides the production part of things, we still consider blocks 3 and 4 to have a lot of future potential as well. So we still have an enormous seismic acquisition program down here in the south, where we hope that we will obviously find some quite interesting things, but also in our previously operated active areas. On block 58, yeah, it's one of the it's a very exciting block, we would argue. We have 2 potential areas where we are active right now, and it's South Lahan and Fahad. We are currently in the exploration part for both of this, and we are going to drill in 2023 on block 58 as well. The current process is what we would call the desktop operations, basically. Like it's studying, you could argue, of all the data that we have accumulated so far, and we think that this so far has been quite positive. Obviously speaking, we are still at least 6 months from starting any type of drilling operations here, but so far the data has reinforced the way we look at it. Block 49, yeah, this is we have not given up on block 49 by any means. For those who know it, we drilled here in 2021 in Thamin 1. We didn't find we didn't get any oil flow to the surface for this, but we're still considering some unconventional methods here to be. But we've increased the amount of time we have basically for this. So it's no real stress, and it's a slightly less active area right now than blocks 58 and 56, obviously, because we still consider those to be our main exploration blocks. In terms of the financial highlights for the recent year, yeah, they almost speak for themselves. It's quite easy to talk about this. Obviously, we have had a great push from the oil price. We can't deny that, but we still sort of like this graph in terms of what it shows. We have a lot of income right now, and when we managed also to get that to the bottom line. So, but at the same time, and this is perhaps what I wanted to lift at, we're not just dividend. We invest quite a lot, and we have invested over 64 million so far this year. We're aiming at in the 84 million area in total for the year. And that is more than 2020 and 2021 combined. So it's a high level of investments we're going through right now. But despite that, we generally speaking have a positive free cash flow. So it's it hasn't affected us too much. The dividend so far this year, or distribution so far this year, 23 millions. And to date, or until Friday at least, we have bought back so far about 190,000 shares. And despite that, we have roughly 40 million in the bank. So we have a very strong position to go forward from. I'm not going to get too stuck on the financial parts. Generally speaking, I think that the overview explains it quite a lot. But if we just look at the graphs, we can basically say that they are all positive right now, going steadily up. Obviously, we will see, or we know that the oil price has gone back a little bit, and that will most likely have an effect on us as well. But generally speaking, we have a very positive trend. And this goes obviously for the cash flow from operation as well. I've already been through this, but what might be interesting to see here is especially where we are investing our money. So we have, this is block 3 and 4. So this, you could argue, is just on the production side, and the blocks above are our exploration blocks. But as you can steadily see, those as well have been quite high over the past year. We think that we are past the peak of investment on these blocks, and now can perhaps start a little bit more exciting news kind of action in terms of drilling, and hopefully in the near future also some initial updates from the test production. Generally speaking, we have a decent or quite strong cash flow. Quarterly one is basically affected by dividend. That's why that looks a little bit harsher, but in general, this is good. So before we go into questions, we just want to take a brief outlook and summary of where we're at. And like I said before, the most exciting thing in the near future is, of course, our extended well test on Algeriet. Our goal is to start this in the next couple of weeks, but give or take a few weeks from that. But it's very close. We have seen the peak in exploration spending, and going forward, like I mentioned, we will have some more interesting news than just CapEx. But we are quite excited about CapEx as well, because without CapEx, there will be no future news. So, but with that being said, I think I just about made it to the 20-minute mark. So I will let the questions begin.
Perfect. Thank you for your presentation. So let's start with the exciting developments at Algeriet discovery. You mentioned here that the tests are weeks away. So soon we will perhaps start hearing some new news flows or something from this. So this is really my question. What can we expect in terms of updates and news flows connected to the development of the discovery?
I mean, the initial news will obviously be that it has started. That is where it will begin. In terms of how we will update, it depends basically on how the test is going, I would argue. Like, if there is any major inconsistencies from what we expected, then obviously we will update about that. But generally speaking, this is a test that goes on for quite a few months, and we are using that amount of time for a reason, so to speak. But if any development occurs that's basically not what we expect, then yeah, obviously we will have to update about it.
Okay, perfect. And then if we talk a bit about the disruptions that you have been talking about already and that has been occurring during the year, they have been especially connected to operational challenges, and you do mention that you are working on solving the bottlenecks looking forward. You mentioned at the Q3 numbers that in 2023 you are expecting production growth again. Do you want to comment any further on this and what the actual activities that you are performing right now are more about?
Yeah, okay. So, I mean, the activities on 3 and 4 on the production side is, you could divide it into 2 parts, perhaps we could argue. One is that we want to increase the drilling going, basically. And this is where the additional drilling rig comes in. But also, like in terms of the bottlenecks that we're talking about, those are different kind of bottlenecks. There are bottlenecks that has occurred due to decreased investments previously, so that we are now seeing the effect of, and there are bottlenecks in getting things going again, so to speak. So it's different kind of activities on these two, like depending on what it is. The previous lack of investment, in some ways it's about just increasing investment again to get it back, to catch up. Sometimes we call it the catch-up program, and to a certain extent that is a good phrase, because it is about regaining. But in terms of like what production will end up on, we can't say at this point. We are currently, I mean, obviously the goal is for this to have effect, but figures at this point would be dubious for me to say, honestly. We will release our guidance in February, somewhere before our year-end report for the coming year. So by then we will know more.
Okay, thank you. And we have been talking here today about both buybacks and dividends and all of these shareholder distributions. Do you want to comment any further on your allocation strategy here when it comes to, well, comparing then CapEx and future development compared to the distributions?
Yeah, I mean, if you look at it, like this, in terms of how we distribute cash to our owners, these are just different methods to reach the same result, basically. And in terms of the share buyback program, a lot of people wonder about this, but it's just one tool, basically. We don't have a set goal. This is, we should buy back this amount of share. It's a lot of things that we consider when we talk about this, or when we buy them back. The share price, obviously, but it's still also about like short-term cash, long-term cash, what we need it for in the near future, and what we expect to get in. So there's a lot of things to consider in terms of that. And in terms of dividend and you know, it's for the board to say, but we still have a very strong cash balance, generally speaking. So it's not something that we are worried about, but especially for this year, like, yes, it has been a lot of capex, and what I can sometimes feel it's not being pushed enough is like we invest in this because we believe in it, not just for the heck of it, so to speak.
Okay. Continuing a bit on that note, you do mention that you have a very strong balance sheet and a very strong cash position. Is this a level, the level that you are currently having? I think it's about 13 Swedish crowns per share in cash. Is this a level that we can assume that you will continue holding looking forward, or are there room for even further distributions, or?
You mean if we will keep the amount of cash?
Yeah, the cash level that you have currently.
Well, yes, in a way. Obviously, that's what I mean. It's a cash-intensive industry in many ways. We're in, like, we are a fairly small company, and cash at hand is a great value in both short and long-term situations. So. But with that being said, like dividends will keep coming, if I put it like that. But I can't say anything about the exact level for next year. In the year-end report, we will do, which is February 7th, I think, we will discuss that a little bit more. But in terms of, for the moment, we are in luck, so to speak, that our cash flow is very strong. So for the time being, dividend and capex has not been an issue. And like we pointed out here, in some ways we are past the peak capex. So going forward, we should see slightly less on that end. So yeah, in balance, a little bit more cash flow perhaps.
Okay, perfect. So just to finish up, what would you say will be the main happenings during next year for you?
Basically the thing on this slide, actually. No, but I mean, we are very excited about our exploration blocks because those are the news, so to speak. In terms of production, we will aim at stabilized production. That's basically it. But that is perhaps not the most exciting things to say. But the exciting things are obviously the test program on Block 56, but also obviously to see what the exploration drilling in both the central area of 56 and on 58 will show. So I think those are the exciting things for people to look out for. So.
Okay, perfect. Thank you very much for coming here and presenting, and thank for all of you who listened in. Thank you.
Hi and welcome everyone to today's presentation of Polygiene. My name is Stefan Knutsson. I'm an equity analyst following the company for ABG. And with me today I have the CEO of Polygiene, Ulrika Björk. Welcome, and the floor is yours.
Thank you. So I'm Ulrika Björk and I'm the CEO of the Polygiene Group. I would like to introduce you to Polygiene and our business. So Polygiene for mindful living. That actually means for us to be aware, caring and responsible and contribute to a more sustainable world. That is actually the umbrella of the company. That is the mission that we are working against. We are a Scandinavian company, and the foundation of our company is that we are an ingredient into other companies' products. So we don't hold our own collections, we don't have our own products. We actually function as an ingredient technology to enhance other products. Very short recap on the history of the company. We existed since back in 2006, and that was in the wake of the SARS epidemic that raged in China. And the demand for antimicrobial technologies were actually growing, and at Perstorp, the big Swedish chemical company, they developed a product that was very efficient against virus and bacteria. So the Perstorp group decided to commercialize this with Polygiene, and we tried to get out to sell this into hard surfaces where we could find a lot of bacteria, like in toilet seats and door handles and everywhere. But after a couple of years, the sports industry approached us, and they actually asked us if it was possible to treat textiles because they had a major problem with odor in training clothes, mainly. And we tested this, and it works out very, very well. It actually inhibits the bacteria growth, and without bacteria, you will have no odor. And what happened after was that the board at that time decided we actually have something we could commercialize, and we raised money. We decided to invest and build an ingredient brand called Polygiene, and also to invest in the organization and try to grow this. We were listed in 2016, and we also got into other kind of industries like fashion and home textiles and workwear. So it's not only sports that demand in this technology, it's also other segments. And in 2018, I was appointed in January 2018 as the CEO. I have a background as the CFO before in the company. And then we decided to revise the market and sales strategies, because being known as the older company, Polygiene, sounds very appealing. So we decided to switch the messaging to actually be a company who could have sustainable solutions for the textile industry, which is very well needed. And we also decided back then we need to find new technologies. We can't lean on one technology that we've been doing for 15 years or at that point. So we launched a technology in 2019 called Odor Crunch, and that was award-winning. So we got recognition in the sports industry. We also decided to invest in China because we thought that that is actually the right place to be to grow this market. So in December 2019, we established the Shanghai company. And then everybody knows what happened in early 2020. And when the pandemic hit, we actually had a person in the company said that we know we have data from SARS-CoV virus since before. So why don't we test again and see if we can launch a new technology? And that's what we did. So 7 April 2020, we launched the Viral technology. And that was a great success in the world. So we actually got big traction in the industry. The share price was affected as well. And that actually led us to that we could make the acquisition of Admaster, which has been the sole supplier for us for more than 15 years. And they have been only focusing on the hard surfaces and Polygiene on the textiles. So together we could saw a really big synergy and to extend the offering to the customers. So that was a very good match between our companies. And we've been working with integration now for almost 2 years, and it's been very successful. We are operating in 10 different categories. We have the old freshness categories like the sportswear, the fashion, the workwear, the home textile. But with Admaster, they brought a lot of new categories with food that is very interested, and healthcare, transport, hospitality, professional industrial, and also water that is also very interesting in terms of of antimicrobial treatments. We divided the business into 2 business areas, where we have freshness on one hand and the protection on the other hand. And the freshness business is what you can call the old Polygiene business that treats textile to contribute to a more sustainable textile industry. And the big key driver there is the sustainability demands that the brands have now, and the Agenda 2030. There is a big demand for sustainable solutions. And then we have the protection that is actually durable antimicrobial protection for all kinds of materials and surfaces. We can treat everything from plastics to paper to wood to paints and coatings, all kinds of materials. And of course, again, after the pandemic, the awareness and the interest for these kind of technologies has again been very demanding. The value proposition, we're not only selling a chemical, we actually have 3 equal components that our offering consists of. So it is, of course, the technology, that the chemical itself. And we are working with the best technology in the business, and we also have a long experience of how to apply them, how they behave on different fabrics, etc. So there is extensive knowledge as well. The second is the marketing and the sell-through, that we actually help our customers to communicate and sell these technologies. Because it is an invisible technology, you can't see it, you need to explain it, and you need to help them communicate. And then the third one that is actually one of the most important also, it's the support and services. Because selling chemicals, it comes with a lot of regulations. And all regions have their own regulations, and there are different kind of rules that you need to be followed. So this is something we help our partners with, because they can't manage this by themselves. It's a jungle. So that is one thing we support with. We also support them with testing. We support them with the application service at the mill level and all these kinds of things. So that is equally, these 3 pillars is what the offering consists of. Many of the competition is just selling the chemical in a bottle and then they leave. But our added value is actually all of these 3. Very short on the technologies. These are the 3 freshness technologies we have. We have the odor crunch that I spoke about before. It's a reactive technology. It means that it takes care of odors that already exist, so it's reactive. Then we have the stays fresh in the middle that actually inhibits bacteria to grow, and that is a proactive technology. So it actually takes care of the bacteria at the source to prevent the odor from even appear. So a combination of these 2 is actually something that is making a premium product, and many of our customers are doing the combination. And then the third one is actually something we got with the acquisition of Admaster, and we haven't activated it yet within the freshness, but it's actually a scent master, and it adds a scent, a pleasant scent to products or places or where you need to add something. Very interesting technology to combine here. And all our technologies are tested, they are compliant, they have registered in all the kind of registers they need to be. They have certifications from the industry, easy to apply. You don't need another step or another process in the application process. So that's also a benefit. And they are long-lasting. So they last for up to 50 washes. And if you put something in the table, it's there for the lifetime of this table. So it's durable technologies, and that's important. Whatever you read about that it's washing out, that's not true. It's actually function for up to 50 washes. On the protection side, we work with the Biomaster, that is these polymers that you melt into materials. And you also have the Verimaster, that's actually a new technology, which is very, very interesting also for the freshness. And that is a technology to prevent counterfeiting. And everybody knows that it's a huge problem in the textile industry with the brands to be copied. And this is a way to secure it's the original. You actually add something into the a thread, and you can sew this into the care label or somewhere else. And then when you light with a UV light, you can see it actually flashes back. And this is used by, I can't say the name because we have NDAs, but one of the biggest sports company in the world, and it's not the one with the 3 stripes, but they use this. And of course, they don't want to talk about it because we don't want them to find out and then to make copies again. But this is super interesting. We just launched it into the high-end brands in the freshness, and I think there is a big synergy here by cross-selling. And then we also have the viral off, but I didn't find the picture of the viral off, but that's an antiviral function in textiles. And the same here, everything is tested and compliant, and that's super important. The marketing support, it's about how you brand hang tags, how you communicate, how you help them to sell in the POS material, how you help them online, what to write, what to claim, etc. And this is actually pictures from stores. I was in Tokyo for a couple of weeks ago, and I took these pictures in the stores. And it's a pleasure to go shopping in Japan because you see Polygiene everywhere. It's a big difference. They really, really like the brand, and they like to talk about the Scandinavian, the Swedish heritage. So we actually very, very good to see like Adidas doing the hang tags. We have Champion, Helly Hansen, nice brands to be seen with. And this is also from US, the CCM glove. It's a hockey glove, and we know that they could stink really, really bad, and also that they are thrown out before they are actually finished because of the smell. So this is treated with a combination of Stays Fresh and the Odor Crunch, and they brand very, very nicely. And they also do the skates, and they do the protection gears. A lot of products with CCM, which is a really nice brand. Yeah, and there are many, many benefits for the consumer. So this is all this messaging that we help them to talk to the end consumer, to understand the benefit. And it's not only a consumer benefit, as I said before, it's also about the sustainability contribution. So Polygiene, we are working and supporting 4 of the SDGs. And for instance, the number 13, it's about how you can improve awareness and education to get people more mindful. Number 12, it's all about how you can reduce new products and reduce consumption. That is also something that we support. So we can actually fit into these 4, and we have strategies behind all 4 of them. This is also something that is interesting. It's a greenhouse gas protocol. All companies need to go through this. Polygiene as well. We are doing scope 1 and 2, and we're starting with scope 3. And this is interesting for where Polygiene can add an extensive value to our partners, because the brands that put a T-shirt on the market are responsible for that T-shirt to the end of life. And if they can prolong that life, as you can see, many of your brands, they are starting with secondhand. They are trying to take products back and sell them again. This is part of this, what they need to have to do to reduce their climate footprint. This is also something that is new. We just launched this life cycle assessment, and this is basically to show that if you add Polygiene, it is a cost. Yes, you cost something to do. Everything you do is a cost on the environment. But if you look at the life cycle of this T-shirt that we treat, it's actually a big impact. And this LCA was made by Sweco, which is a Swedish engineer consulting firm, and it's verified by a third party. And it's also made by the ISO standard for LCA. So everything is like real data. Very fast. We took 3 T-shirts. We took 1 not treated. You train, you sweat, you stink, you wash. The second one, we put Polygiene in, but you wash it anyway. Even if you don't have to, you wash it, just to show how much that cost is. And then the third one is, if you only skip 1 of 2 washes, so you actually basically train twice, and then you wash. So this is what we measured. This is all of the environmental footprints that a T-shirt have on the environment. And as you can see, the gray one is the T-shirt itself. The orange is Polygiene on this T-shirt, washed every time. But look at the blue one. When you skip 1 of 2 washes, we actually reduce the environmental footprint by 37%. And this is not our numbers. This is what they came up with at Sweco. And you see the small cost that Polygiene adds on the ecotoxicity, because that is what we measure. You can see that everything you read in the newspapers about silver being mean or toxic or whatever, it's not true. Actually, it can help to reduce the global footprint. And this is something that we definitely will launch and talk more about with our brands. And they love it. They want the whole study. It's a 25-page study, and all our brands are screaming to have it. So this is a great investment. And then number 3 is the global reach. We are a small company. We have 48 team members. We have local technical and marketing support out in the regions. And then we have a central headquarters in Malmö. We also work with these external agents that works for commission, because that was the best way for Polygiene to grow back then, that to take external agents with no salaries, just commission of what they sold. And we kept them because they're really good, especially in Europe and Asia. We still work with the same agents as back then. And we also keep local stock out there for distributors. And that is something that hit us in the Q3, if you follow us, that the one in China, they didn't order as they normally do. They have like a steady flow of orders coming in every quarter, but in Q3 they didn't order, and that was because they had from their owners that they need to reduce the capital tied up in stocks, and they wanted them to go down, and they also saw that the orders was a bit slowly down. So that's why they haven't ordered. This is just, we work with 400 premium brand partners we had, nice brands here. On the protection side, we also work with nice partners. We have cars. This is Neo. It's an electric car from China. We treat the seats and the steering wheel, and we're now looking into the panels as well. Airlines, we're working with a company who makes leather seats, or sustainable leather seats, and we go in with our technology into that seat, and they are selling these to the airlines. And I know that Turkish Airlines, Malaysian Airlines, and Japanese Airlines has committed to buy. So it's a bright future, but you know, as everybody else is hit by this recession now, and our challenge is more that our customers are suffering. So if you look at the sports brands, for instance, they are down a lot, and they have so much stock that's why they don't order from us. That's why we see this delay. But if we look year to date to end of September, we're actually down -5.5, and I know it's the strong dollar make it a bit boosted, because we know that the strong dollar help us because we sell mainly in dollar, but also in pounds a lot. Gross margin is strong. It's actually much stronger than last year, and it's because we don't have so many distributor orders, because they have a lower margin. So the sales mix makes that the freshness business is actually very high margin. The operating expenses, as you can see, they increased a lot, but that's driven by the travel cost, that we started to travel. We have been attending trade shows and a bit over-invested in trade shows since we were absent for 2 years, and now we want to make a real impact. And we just were at ISPO, the biggest sports show in the world, in Munich, and that was huge success. But of course, we're looking over the operating expenses, we're looking over the staff cost. We have more synergies to get out from these acquisitions. So now we look over the organization and see if we have double functions that I believe we have. Yes, and then also important debt-free, that is super important today. Cash in the bank, positive cash flow. We have a strong ownership structure. Many of the top 10 also are the biggest shareholders. I think Peter Gyllenhammar now is our biggest shareholder. Business plan to 2026, we launched that 1 year ago. That was before the war. It was when we thought the pandemic would be over in China. And we also, we thought that now we are ready to go. And then this year has been a middle year where we actually are ±0. But we have a plan to grow to this billion. We are in the budget process now to check if we could need to prolong 1 year or we need to just reduce the number, because we actually lost 1 year. And then success factors for the company. We are in a strong position now, and I think I ran out of time now. Thank you.
Perfect. Thank you, Ulrika, for the presentation. You mentioned that you had seen some headwinds during the year, and maybe especially in freshness, that is most exposed to a weaker consumer. Have you seen any relief of late in Q4, or is it still a grim market out there?
It's still, as I said, they have a lot of stock. That's what we heard now on the show when we met many of our partners, that they have a lot of stock because they don't sell as much as they believe. And some of them also stocked up because of the supply chain issues, and that they were scared that don't have stock. So I think they are a bit overstocked, but in the same time, I'm quite confident that they need to reorder at some point. And you look at the activity on ISPO, that you can't say there is a recession about the activities and the projects in the pipeline.
We have seen now some news about easing COVID restrictions in China, for example, and you have a fairly large exposure to the Asian markets. Is that something that can act as a catalyst for you to come back to normal levels in freshness?
We really hope so. We have a team there, and they have been actually locked in for 3 years. It's amazing too. You can't understand it when you live in this part of the world. But we see some, as you said, eases. They been to a show recently that opened up only for Chinese people. But then suddenly you have one case in the region, and they close the full region, and then you just need to wait until it open up again. So it still affects us, but I think it's going to ease up.
Perfect. And then we also have the protection business area, which has been more resilient towards this downtrend that you have seen. In your last conference call, you talked about the good order inflow, especially in the transportation space. Are you still optimistic about the outlook for that business going forward?
I think so for the future. I mean, Neo is not many cars. It's quite small and is one model still. We launched another model with Fiat. They made a collaboration with a special edition. So we're tapping into that area, but I hope we could get to the real volumes, not for these special collections, like we can go broader. And for the leather seats that we work with, Muirhead, they have been very successful. So they report back to us. These 3 airlines and also the railways in Ireland, they're going to refurbish, I think there was 15,000 seats. It's not a big volume for us, but it's a big exposure for other countries or other companies to do the same thing, actually.
And in the presentation, I noticed that you talked about the Scentmaster and the Verimaster, which you haven't talked that much about before, being newer offerings. Are you seeing some traction in those areas?
Yes, as I said, we started with the Verimaster, what we believe in high-end. And we work with Prada, for instance, in Italy. So we're actually planning to do a trip to Italy and go to these more high-end brands to see if it's important for them. But I think it's a really big add-on because the counterfeit market is huge.
Perfect. And then you also talked about price hikes during your last conference call. How is the customer responding to that? And is there any difference between your 2 business areas?
You mean the price adjustments?
Yeah, exactly.
Yeah. We made a price increase in October for the protection business because we see higher raw material prices. On the freshness side, we haven't made any yet. We believe that we still have this strong margin. So for competition reasons, we don't think it's time to raise our prices. I think we better go the other way and get more volumes instead, because we have a really, really high price if you compare. The margin of the freshness business is actually 75%. And then it go down to 65 with Admaster, who is more traditional 50% margin.
Perfect. And then lastly, I would like to ask, in your opinion, what has been the main theme from the recent trade shows that you have visited?
It's all about the sustainability. Everybody talk about that. And we had this camper van, and we printed T-shirts that was treated. And we had a queue from morning to evening, all 3 days, handing out more than 1,000 T-shirts. And that's brands, it's retailers, it's manufacturers, it's important people who get these T-shirts. And actually, the booth was the talk of the town. We get a lot of, cred for the booth. So I'm really, really proud and happy.
And this market survey that you talked about that Sweco conducted, is it something stopping you from releasing that to the public?
No, we're just making it easy for a normal person in the street to understand it. So we try to, like I said, do easy pictures. But then the other one, the big one, we already sent to many of the brands, the full study. But we will launch this with a press release. And yes.
Okay, perfect. Then I would like to thank you, Ulrika, for coming here and presenting with us today.
Thank you. Thanks.
Well then, welcome everyone. My name is Victor Kruger. I'm a real estate equity analyst at ABG Sundal Collier. I'm delighted to be moderating our 3 real estate companies that are presenting today. Starting with Eastnine, followed by Lunch, then Fastator, and finally Diös. We have Kęstutis Sasnauskas, who's been having a background within East Capital, and we have Britt-Marie Nyman, who has had 5 years of head of capital markets at Catella. And they started in 2017 and 2019 respectively, so as such they have been part of the transformation journey that Eastnine has done from an investment company towards almost a pure play real estate company. I'm very excited to hear more and get more insights about the company today. So with that, welcome Kęstutis and Britt-Marie.
Okay, thank you very much. And I'm very delighted to have a possibility to actually present today our story and what we're doing. So if we have just a brief look at what Eastnine is, we're actually a Swedish listed real estate company. With one big difference, that all of our properties are actually in the Baltic states and Poland, so on the other side of the Baltic Sea. We run a very modern portfolio of 14 properties, total property value of around 600 million euros. And our properties have highest environmental certification on 89% of our floor plates. So basically, majority or very vast majority is very modern, very centrally located, and a very nice property portfolio. Total lettable area is around 183,000 square meters, which puts us into markets like Vilnius as one of the largest office owners and managers today, with approximately total market share of around 12-13%. And since the very start, our vision was to actually create venues where people can meet, ideas can flow, and successful business can be developed. And we're working with a very nice and creative environments, and we always try to provide absolutely the best venues to our customers. If you look on the Baltics and why we find Baltics so exciting and Poland so exciting is actually the very big difference in terms of yield gap. When we look at our underlying businesses, most of our customers are actually internationals. It's a very international business. Our properties are located in the Baltics and of course in Poznan in Poland. So they are subject to local market conditions. The yields are significantly higher, and we're always at 200 to 300 basis points higher yields compared to the Nordic peers for similar type of location, similar type of property, and similar type of tenancy as such, which creates a significant gap. And of course, the financing cost is relatively similar. So the spread is probably one of the highest compared to our peers. Why we like Baltics? Of course, I talked a little bit about the yields that are significantly higher compared to the Western markets, but also it's a combination of higher yields and significantly lower rental levels. Of course, Malmö and Gothenburg would still be very significantly higher above our Baltic capitals, which makes it very exciting. So if you look on places like Vilnius, Riga, and Poznan primarily, we are 4 times lower rental levels compared to Stockholm. And significantly lower rental levels compared to any other capital city in the Nordics or bigger city. If you look, if you compare to any of the 10 largest cities, we have a variety of vacancies, and those statistics probably differ a little bit more compared to Stockholm. If we look on the total stock, there is a high vacancy in the Baltics. But if you look on the prime segment, vacancies are very low and vacancies are higher in a secondary segment. So, and we are in the primary segment, so our vacancies are relatively low today and have been so for some time. We work quite a lot with sustainability certifying our properties. So if you look on this 89% of certification, these are shared between BREEAM Outstanding and LEED Platinum. These are the highest brackets. 11% is ongoing, and of course it changes all the time as we acquire new properties. If they are not certified, we immediately do the certifications of them. We score 92% in GRESB, which is a kind of ESG score, and it's a very widespread study, and we score very, very high. We are among top 20% best globally, and we score very close to our Nordic peers. We also are number 6 this year in Allbright's Gender Equality Index out of 360 companies listed on Stockholm Stock Exchange. So we score very high, and our employees consider Eastnine being a great place to work. We are also Great Place certified, which means also we are scoring very highly in those surveys. So if we look on our property portfolio as such, if you look on Lithuania, Latvia and Poznan, basically 70%, closer to 70% is in Vilnius, 20% in Poznan, and around 10% in Riga. And here is our portfolio. So you can see it's very modern. If you look on the locations, it's very centrally located in the CBD area. And you can see the tenancies as well. We have one exciting development project in Vilnius right now, which is adjacent to our Trys Burės complex. Actually, it's in this spot here. And we will see when we start developing. I think today the market is a bit turbulent in terms of pricing and deliveries and so on. But once that settles, we will kick off with that as well. In Riga, we are very centrally located along the main street called Kristiana Valdemara in the central part of Riga. So those properties even more central compared to Vilnius. And we have growing occupancy here. We had a bit of a higher vacancy primarily in Alojas Biroji, but now it's growing. And that was connected more to potential development of the Pine. Now when the Pine is delayed, we're also leasing those premises out. And in Poznan, it's our newest acquisition. This year we acquired almost 40,000 square meters of very modern office space. It's fully let, and also we have very nice tenants, Allegro, Rockwool, and Arvato. Allegro is, for those who don't know, it's the 6th largest global e-com site. It's the Amazon of Eastern Europe, basically. So this is our tenancy distribution. We have, you recognize most of the names in terms of, most of them are Nordic players. The newest are, as I mentioned, Allegro. Rockwool is a Danish manufacturer of insulation. Wargaming is actually officially domiciled in Cyprus, but it's a company originating from Belarus, and actually that also moved part of their operations to the Baltics. So over to you, Britt-Marie.
Thank you. And we will continue with the quarter, the period, and some financials. We had a very positive quarter and period with a positive net letting for the third quarter in a row. We had a record high profit from property management, both during the quarter and the period. And as Kestutis said before, we received 5 stars within sustainability from GRESB. We continued working with certifications within sustainability, and we received the first certification for well-being in Valdemara Centers in Riga. We launched a PropTech innovation camp a couple of weeks ago in order to improve development within real estate sector, and we signed, this is perhaps the most important thing, after the end of the period, we signed a sale agreement for the investment in MFG. And as Victor said before, we used to be an investment entity. We are almost a real estate company today, but we have the investment in MFG. And the sale agreement was signed with the listed Russian investment company Sistema, the biggest one in Russia. The price close to 200 million euros. Of course, this is not easy. It's not easy to sign and close a deal like this. It's subject to several conditions outside our control, such as regulatory approvals and sanctions, but we are working on it, of course. We still expect this to be completed during 2022. It's important to remember that MFG continues to perform very well. It's a good company. What about the financials? They are very strong. The occupancy rate increased to above 94% during the quarter. We compare the third quarter with the second quarter, and this is due to a very positive net letting during this year. And the tenants is still moving in during the fourth quarter, so hopefully we will see even higher figures by year end. The surplus ratio increased to 92%. And this is an extremely high figure if you compare to companies, real estate companies working on the Swedish market. They are normally around 65–70%, and this is due to the high degree of triple net leases in East 9. And triple net leases is better in the Baltics and Poland than in Sweden. The property yield in the earning capacity improved up to 5.2%. Due to higher NOI, the net LTV properties a little bit lower due to amortizations. The interest coverage ratio improved due to higher NOI, and despite a higher average interest rate during the quarter. This is my favorite page, and it's because it's forward-looking. If we look into the earning capacity, we compare the situation by the end of September with the situation by the end of June. And it's not a prognosis, it's based on current agreements when it comes to lease agreements and loan agreements, and also certain assumptions like property costs and so on. Normally we can see a large improvement between different quarters if we acquire a new property, but we didn't acquire new properties during the third quarter. But we improved the occupancy rate during the quarter, and you can see that it has affected the vacancy value, which decreased since we are able to transfer the property costs to the tenants if the premises are occupied. But in the opposite direction, you know that the interest rates increased during the quarter, meaning higher interest expenses. But on the bottom line, the profit from property management improves, and it increases more than rental income and net operating income, and that's very important. A little bit about this financing structure, which is very stable. We only have 14% capital market financing. We have one bond maturing in July 2024. We have 5 different banks, and the share of green financing is improving up to 48%. If you look into the loan maturity and the interest maturity to the right, you can see that the loan maturity is 2.6 years by the end of September. And the first maturity, if you look at the blue, dark blue bars, you can see that it's in the end of 23, in Q4 23 even. The average interest maturity is 2 years, and we have 71% of the interest-bearing liabilities fixed with interest swaps. So Kęstutis, over to you.
Yeah, so why do we think East9 is actually a compelling story? And this is basically 4 main reasons. Partially, we have a fantastic portfolio of very prime, very modern properties already established, with a very exciting region, which is growing rapidly and developing very rapidly. And again, a combination of higher yields, lower rental levels, and basically the similar kind of financing as we have in the Nordics. Those properties are leased by very stable and strong tenants with international businesses. So it is those properties are generating very strong and relatively stable, I would say, cash flows. We lead the way in terms of sustainability in the Baltics. We work very hard on improving our properties, even from the very good level and modern stock. We still continuously working on improving energy efficiency, improving all parameters of basically making our footprint to the climate as small as possible. And we have a fantastic journey ahead. The Baltic markets and the Polish markets are growing. There's convergence story going on all the time, every day. And we've seen over the years that actually these markets have been growing faster than the Nordics, faster than the developed markets, especially in case of Poland, significantly faster. Since basically the collapse of the Soviet Union, and it's continued growing. So we have a very, very exciting journey ahead, and we have quite ambitious growth plans. So on this, I would like to finish and open up for questions.
Thank you both. I want to start off with a current topic with inflation. It affects you in some different ways. You have above 20% inflation in Latvia and Lithuania. Then you have the EU inflation at around 10%. You have Polish inflation somewhere in between. Could you elaborate a little bit on how this impacts you as a company, first of all?
Of course, in a positive direction when it comes to the rental income, which is most important.
And are you certain how much of each could you sort of...
Yeah, all our contracts are linked to some kind of CPI. Around 2/3 of them are linked to the euro inflation and 1/3 to local inflation, and mainly as an annual average, not like 20%, even above 20% today. It's the average during the year, normally. And some of the contracts, when it comes to the larger tenants, they are capped around 2%, 3%, 4%. And they are linked to the euro, but they are capped on average 3%, perhaps. So we don't expect the increase to be like 10%, 15% or 20%. It will be below 10%, somewhere between 5% and 10% in average. But this is not so problematic for us that we can't get like 15 or 20%, since we have these triple net leases, meaning that as long as the premises are occupied, the property costs isn't our problem. It's mainly the tenant's problem, since they pay for the property costs. So that's very important to remember. Yeah.
90% compared to more 60 or 70% in Sweden.
That's true.
Yeah, that's a big difference. Is your understanding then that tenants can take these costs to a larger degree?
We think they definitely can take the energy cost, and I think now we probably see a bit of a slowdown of those coming further. I mean, we don't know, but this is at least the tendency we experienced the latest in the most recent weeks, at least. What is probably challenging, of course, when you have such a high inflation, it implies salaries are growing and so on, and the loss of kind of efficiency and competitiveness in those markets. So far, I mean, despite higher inflation compared to any other market around, the Baltics have evolved and actually were gaining market share in terms of global economy. So, which also indicates that they have been quite good in creating value-add products that are exported. It's mainly services. So from that perspective, it's a little bit of a concern. But of course, high inflation is always worrisome if it stays for a longer time.
Yeah. You talked about vacancy levels as well, and they've come down quite significantly overall in both Latvia and Lithuania.
Yeah.
What is the impact from this on net leasing and occupancy rates going forward?
I mean, we expect to have a further improvement of the occupancy during the period during this fourth quarter as well, and later we'll probably reach a level where it will be very difficult to improve the net lease out, because we will be at a very high rate at the moment. So we'll reach.
So net leasing, to clarify, is new leases minus terminated leases.
Exactly,
Yeah,
but when you're at 90, close to
95,
96%, it's difficult to increase that.
Yeah. And to mention as well, you want to have around 5% vacant in order to be able to move around.
There is always 5% need to match the movements and so on.
You also mentioned collaborations that you launched in Q3 with Rocket and Sandbox.
Yeah.
Could you, from that, sort of dig a little more deeper into what the business climate is like in Lithuania?
No, I think the idea follows very much a recent development of fintech industry that has been actually quite successful in the Baltics and primarily in Lithuania, where basically market participants, including the central bank, opened up and allowed for innovation within banking technologies. We try to replicate something similar by encouraging young entrepreneurs, young students or startups actually to come up with new ideas within the real estate technology segment. And we see huge potential because still, despite having relatively modern systems, there is so much more to do of innovation, automation, that can actually improve the performance of buildings. Most of those solutions are still not very present if you look on the overall stock. So our ambition is actually to create a kind of environment to support creating the environment for those kind of new technologies, new ideas to be developed. And it's the first initiative. We'll see how it will develop, but it's just our contribution to improve further the industry.
Then you're mentioning the Polish market as an interesting growth opportunity. First, are you considering any certain geographies in Poland?
We started with Poznan. We would like to expand in Poznan as well. And as I mentioned, we always try to create strong hubs in every single particular market when we enter. Poznan was very easy to understand for us to start with, and we really like that market. So we probably grow in Poznan in the future, and look probably more towards Warsaw as well.
Because you mentioned how it compares to Lithuania and Latvia in terms of rental levels and property prices, yields. But how is it in terms of other characteristics like GDP growth and employment, urban density?
We see Poznan is actually the second richest city in Poland after Warsaw. If you look on the GDP per capita, it has a lot of industries around. So it's the suburban area of Poznan is actually similar to the whole country of Latvia. So this is still looks like a regional city and the sixth largest regional city. Fifth or sixth? Fifth largest regional city, but still with a very, very sound business around it. So there's plenty of opportunities and plenty of developments, big factories. And we see also a number of tenants that, or our customers that we see in the Baltics, we see them as well in Poland. So from us, it's a very natural step.
And then just to touch base on your projects as well, because we've been talking a little bit about the other parts, but you run 2 in Riga and 1 in Vilnius, and now the business climate it's challenging. Are there any? What is like the main 1 or 2 things one should look out for in order to see hints of that you might be starting up these projects again?
I think in Riga we would like to see a stronger development in the rental levels. And a stronger demand coming up. In Vilnius, demand is existent, and there are certain developments taking place around our properties, which we're very happy because the location is getting strengthened. And in Vilnius, it's more about basically, stability in the construction business and construction costs and so on that we would like to see.
And lower construction costs.
Yeah, of course.
No. It seems to be we have time for 1 more question or so. Thank you. I think it's worth pointing forward because since we're approaching the end of the year, you had a recent press release about MFG. It could be there is speculation, but we can only speculate whether or not this deal will come through with regulatory agencies in Russia and so forth. But you didn't mention that. I mean, in 2021, the dividends and realized gains from the cash gains from MFG corresponded to around 30% of your cash earnings from properties.
Wow.
And last 12 months is 60%. So it's even if you don't sell it now, it's still a pretty good cash cow.
It's a very strong underlying business and it's a very nice company. The challenge today, of course, is that due to current situation, there is a limitation on how much dividends we can take, and those limitations will probably not ease as it looks today in the very close future. So, for us, selling is definitely a very important step to do it, and of course, we need to focus as well. So, for us, it's a very important move.
But we still receive a small amount of dividends each month, like 90,000 euros.
Yeah.
Very clear. Thanks to everyone who listened in. I hope you get a more wholesome picture of IS9 that you had prior to the presentation. And you might be around if there are any more questions from the audience afterwards.
Okay. Thank you.
Thank you.
Thank you.
Varmt välkomna allihopa och i synnerhet varmt välkommen till Daniel Krok, vd på Bredband2 som ska prata om verksamheten, vad som har försiggått under 2022 och även tala lite om utsikterna in i 2023. För er som inte känner mig så heter jag Simon Granat och är den analytiker på ABG som följer Bredband2 sedan några år tillbaka i tiden. Och Daniel ska prata ungefär i 15-20 minuter och sen så kommer vi följa upp med ett gäng frågor. Så med det sagt, Daniel, så får du gärna påbörja presentationen.
Stort tack för det. Och som nämnt här, Daniel Krok har varit vd här på bolaget sedan 15 år, vilket är en lång och spännande resa. Från ett litet bolag som hade stora utmaningar till där vi är idag och är ju tredje störst på fiber i Sverige. Så det känns kul och det finns ju massor av spännande saker att göra framöver också. Agendan idag, det är lite kort om vad vi gör. Och sen kommer vi såklart titta på varför det kan vara intressant att investera i bolaget. Vi har en relativt ny rapport som vi tittar lite närmare på siffrorna. Och sen så är det såklart intressant att se vad vi har för framtid och ett spännande antal frågor utgår jag från. Kassaflöden, det tycker vi är viktigt. Extra viktigt i de här tiderna som är lite turbulenta. Och fördelen vi har i bolaget är ju att i princip 99% av omsättningen är ju återkommande intäkter i abonnemangsform. Privatsidan och företag. Vilket gör att vi har väldigt stabila kassaflöden. Och det kan vi sen återinvestera såklart i nya aktiviteter framåt. Vi omsätter 1,5 miljard, eller omsatte 1,5 miljard. Och 2020 så förvärvade vi en branschkollega som var egentligen i motsvarande storlek som hette A3. Så det har varit mycket jobb med detta under den här resan. Innan dess, alltså Bredband2 standalone, då hade vi ju jobbat med organisk tillväxt fram till 2020. Så att det var ett nytt stort steg för oss och det är vi väldigt glada för. Och det är ju något som vi tycker är intressant för den framtida möjligheten också att både såklart jobba med en stark organisk tillväxt men även titta på spännande förvärv som kan dyka upp. Så nära 500 000 kunder har vi idag. Detta är det som vi vill fokusera på. Det är inte bara en uppkoppling till våra kunder utan vi vill ju säkerställa att man också kan leva i den här digitala miljön på ett tryggt sätt. Det är mer och mer komplext och man är mer och mer drabbad av diverse olika aktiviteter som händer på nätet. Så att vi vill ju såklart säkerställa att våra kunder i den här komplexa miljön kan känna att jag kan koppla upp mig och också känna mig väldigt trygg i detta. Det är ett område som vi fokuserar väldigt mycket på framåt. Allting som har med säkerhet och att man ska känna sig trygg på nätet. Och sen som alltid så är det vi medarbetare, det är ju där det händer. Och vi jobbar mycket med just våra medarbetare. Att man ska känna en stark drive, det ska vara kul att jobba. Vi ska känna att man har möjligheter på jobbet. Man kan utvecklas och man kan vandra vidare inom bolaget. Och det har vi sett många som har stannat länge och har liksom en hög lojalitet vilket gör att vi kan utveckla bolaget på ett bra sätt långsiktigt. Så det är en nyckelfaktor till att sen kunna möta våra kunder just i den här trygga digitala miljön framåt. Tittar vi på marknaden så är det ju Telia som är störst. Och de är ju de som bygger mest fiber till olika hushåll och till marknaden rent generellt. Och sen så har vi ju Telenor. De har ju förvärvat ett antal olika aktörer under resans gång. Vi har allting från Glocalnet till Onit och så vidare som gör att de ligger på en stadig andra plats. Även Bredbandsbolaget ju var en stor del i det. Och sen så kommer vi som trea. Och sen så har vi Bahnhof och även Comhem Tele2 som är en annan aktör. Comhem är ju starka på coaxmiljön men gör ju en förflyttning successivt mot fiberinfrastrukturen. Våra ben, förutom då datakommunikationsbenet, alltså det är ju det som är själva uppkopplingen. Det är ju vår absolut största affär. Både på privatsidan och på företagssidan så har vi som nämnt säkerhet. Det är ett ben som är det nyare benet och det är det som vi som sagt investerar mycket i för att se till att det växer över tid. Och det hänger ju väldigt väl samman med datakommunikationsbenet. Telefoni, A3 som vi förvärvade de kom ju egentligen från det hållet och är ju starka på telefoni och har jobbat med det länge. Så att det var ett bra komplement. Även om vi hade jobbat med telefonilösningar så var vi inte riktigt lika långt gångna så som de var. Och vi fick in ett antal tjänster, till exempel mobiltelefoni. Mobiltelefoni till privatmarknaden. Som sagt, om vi har nästan 500 000 kunder så finns det såklart goda förutsättningar att jobba vidare med våra befintliga kunder och från bredare produkt- och tjänsteportfölj till dem. Och sen på företagssidan, när det kommer till alla typer av växellösningar och liknande, så har de också långt gångna, eller har de kommit väldigt, väldigt långt. Så det har stärkt upp det benet och vi satsar vidare såklart på att bli ännu bättre där. Och sen har vi datacenter. Vi har ju alltid strategiskt valt att inte investera i framtunga investeringar som passiv fiber, alltså dra ut fiber eller stora datacenter och liknande. Utan vi vill ju gärna röra oss på toppen av andras investeringar, kunna ha den flexibiliteten. Det är en lägre risk och vi fokuserar på att bygga egentligen produkterna och tjänsterna på toppen. Det är egentligen den aktiva utrustningen som har intelligensen. Det är inte liksom en datacenter i sig eller det är inte heller den passiva fibern utan det är det aktiva nätet. Så vi har ju ett eget aktivt nät i så långt man kan egentligen bygga ett eget nät, precis som alla andra operatörer på marknaden. Men just att kunna hålla den här flexibiliteten har varit viktigt för oss. Och det genererar ju också, är ju fördelen som nämnt tidigare, att vi har de här stabila och starka kassaflödena som vi har idag. Men tjänsten, den har vi ju givetvis. Vi har faktiskt ett datacenter i Malmö. Men det var ju för att det var en för bra möjlighet för att inte ta den vid det tillfället som gavs. Men annars så hyr vi in oss på andra datacenter och bygger våra tjänster där helt enkelt. Och så tillbaka till säkerhet. Vår ambition med säkerhetslösningarna det är ju att utgå från det som vi idag gör med kunder. Om vi tittar på till exempel en företagskund så sätter vi ut en sån här aktiv utrustning som jag nämnde. Och där finns intelligens. Det gör också att vi kan på distans aktivera, stänga av, låta kunna prova på tjänster på ett effektivt och bra sätt utan att det ska kosta speciellt mycket för att bygga då den här säkerhetsmiljön. Och vi jobbar väldigt nära, Cisco har jobbat under lång tid väldigt nära Cisco där de också fokuserar väldigt mycket på den här typen av tjänster. Lite mer mjukvarubaserade. Så vi vill inte kliva in i konsultdelen utan där finns det många operatörer eller aktörer idag på marknaden som jobbar med säkerhetstjänster. Men just det här att man skräddarsyr och är konsultbaserade är också en osäkerhet. Speciellt till den typen av kunder vi främst söker. Små och medelstora bolag. Där för det första kunskapen är lägre. Man har liksom inte utrymme att ha en egen IT-avdelning som sitter och fokuserar på säkerhetstjänsterna i sig. Och dessutom så vill man ju inte heller ta in konsulttimmar så man inte vet vad slutar den här notan på och hur kommer den se ut under de här åren som kommer. Och det är där vi vill göra skillnad. Utgå från de delarna som vi redan idag levererar, bygga säkerhets- och skyddet utifrån det. Och det är tydliga och enkla paketeringar som vi kan liksom rulla ut och skala. Precis som egentligen alla våra andra tjänster. Så det är det som vi jobbar med. Rapporten som vi släppte nyligen. Här har vi ju som nämnt, vi höjde ju bland annat utdelningen och det är väl det man står inför. Som sagt, inga stora tunga investeringar och den kassan som genereras, det är egentligen två alternativ. Det ena är ju det som vi gjorde 2020, att vi förvärvade A3. Så att vi är måna om att såklart ha en stark kassa att kunna agera när tillfälle ges. Och sen så är alternativet att vi har utdelning till aktieägare. Så det är där vi jobbar med kassan idag. Tittar vi på rapporten som sådan och tittar på egentligen det som har hänt sedan 2020 så var ju 2021 ett år där vi jobbade med de stora delarna för att få ihop organisationen, göra den mer effektiv och till en organisation. Ett varumärke. A3 hade ju 2 varumärken och sen förvärvade vi även ett antal kunder från ett varumärke som heter Thing. Och de förde vi över till Bredband2. Vi är helt övertygade om att fokusera på ett varumärke. Det är absolut det starkaste, för då kan vi gå all in på det på marknaden, och det blir också mycket lättare i all kommunikation och allting som man gör internt, om det är ett varumärke som man jobbar för. Systemlösningar. Migrera över kunderna till ett gemensamt system. Vi har ju utvecklat ett system som heter BOSS, och det är hög automatisering. Och det som vi vill framåt bygger på att vi ska öka all digitalisering i hela kundresan, köpresan och så vidare. Så det arbetet gjordes väldigt mycket och ihop med infrastrukturen under 2021. Så att när vi kom in nu detta året så var det ju fokus på, okej, vi måste säkerställa att vi kan få en stark organisk tillväxt. Precis så som Bredband2 standalone alltid har jobbat och haft bevisligen en väldigt, väldigt stark tillväxt. Så att vi var måna om att ha ganska aggressiv prisbild, aggressiva kampanjer, aggressiv marknadsföring. Med vetskapen att visst, det kommer ut kortsiktigt påverka marginalerna, men det är viktigt för oss att se att vi kan få netto plus tillväxt på kundsidan. Och glädjande nog så såg vi ju ganska tidigt att vi kunde ta oss dit. Vilket gör att vi har en bas för att kunna växa vidare på ett bra sätt. Samtidigt såg vi i Q2-rapporten och även en del i Q3-rapporten att vi tar ju på marginalerna kortsiktigt. Och det är ju det som är fokus nu. Att vi gör ett antal aktiviteter under senare halvan av det här året och under hela 2023. Där vi ska hitta den här balansen. Vi behöver inte vara så aggressiva med prisbilden. Vi behöver inte vara så kampanjaggressiva. Vi kan ändå se till att vi har en tillväxt. Och sen så ser vi över också befintliga kunder och tjänster för att få upp marginalerna till de nivåerna som vi tycker är rätta och rimliga. Så det är det arbetet som vi är inne i just nu och kommer jobba med här under 2023. Här är lite mer av de siffrorna som vi hade med sedan tidigare. Ja, tittar vi på omsättning och kundutveckling så här är ju den organiska resan och sen så genomförs förvärv och här har vi migrering. Det är alltid så att det blir ju en rörelse i kundbasen när du förändrar varumärken och gör förändringar mot kunder så blir det en rörelse, vilket vi ju kunde se under 2021. Men det positiva var att vi ganska snabbt också såg att tappet av kunder, den så kallade körnen, i ett varumärke var avsevärt mycket lägre än när det var 4 varumärken ut mot marknaden. Också för att effektiviteten i hela hantering och allt arbete och all kommunikation blir så mycket enklare och starkare. Och det är ju såklart en viktig del också för att kunna bygga en stark tillväxt framåt. En annan viktig del är ju, som vi egentligen ser att även då A3 som förvärvar inte hade kommit lika långt med, det är ju att öka merförsäljningen till befintliga kunder. För har man en glad och trygg och nöjd kund så finns det såklart goda förutsättningar att vidareutveckla försäljningen med diverse olika tjänster. Och det kan ju vara routertjänster för trådlösa nätverk. Det kan vara de här säkerhetslösningarna som vi pratar om. Det kan vara mobiltelefoni, telefonilösningar och så vidare. Via Play som vi har ett långtgående samarbete med. Så det är också någonting som vi jobbar aktivt med här under 2023 för att se till att vi har en stark organisk tillväxt in under det året och framåt. Och sen en annan del i framtiden som är väldigt viktig. Jag var inne lite kring det, men det är ju just det här att telekom rent generellt har inte kommit så långt faktiskt som många andra branscher, vilket man kan ju bli förundrad över, när det kommer just till den digitaliserade köpresan. Att kunder på eget bevåg ska kunna gå in, göra sina beställningar, göra förändringar, få den hjälpen man behöver på ett enkelt och smidigt sätt utan att man ska behöva ha en fysisk kontakt. Så här kommer vi också jobba väldigt mycket med detta. Och vår strategi som är ju på alla produkter och tjänster, privat eller företag, att det ska vara tydliga, renodlade paketlösningar. Det gör ju också att vi har byggt för att kunna just digitalisera resan på ett enklare sätt. För så fort det börjar bli för mycket skräddarsytt, ja, då är det inte så lätt att hantera det här längre. Så att det känns som en väldigt, väldigt långsiktig och viktig del i vår utveckling. Och BOSS-systemet som nämnt är också byggt just för detta. Även om det har varit mycket fokus på automatisering, att det ska vara effektivt i organisationen hur vi jobbar, vilket också bidrar till en hög kunnighet. Och det kan vara också kul att efter det som jag nämnde 2021 med alla de här förändringarna så var vi ju med nu i SKI-mätningen som är egentligen den största när det kommer till kundnöjdhet i branschen. Där vi kom topp 3 redan nu, vilket kändes väldigt, väldigt starkt. Och det är väldigt jämnt i topp 3 och ett ganska stort hopp ner sen till de större aktörerna där under. Men det visar ju också på att arbetet verkligen har kommit långt och det har satt sig. Vilket är en viktig del för den framtida tillväxtresan. Att vi har glada och nöjda kunder som då kan rekommendera oss vidare eller vill stanna längre och förhoppningsvis köpa lite fler produkter och tjänster. Så alla de här delarna hänger såklart ihop på ett bra sätt. Så mycket fokus på detta och vi har ju med det också mer än dubblat hela systemutvecklingsavdelningen för just detta språnget framåt. Och så kan vi effektivisera på andra delar istället så att vi behöver liksom inte se att personalstyrkan eller personalkostnaderna rusar utan vi kan hålla den balansen. Fast vi styr om resurser till att fokusera på framtidstunga saker. Nu hoppas jag på lite spännande frågor.
Tack så mycket Daniel. Bra presentation som alltid, måste jag säga. Verkligen. Jag tänkte att vi stannar kvar lite vid integrationen av A3. Och med den integrationen så lyckades ni också utvinna en hel del kostnadssynergier. Just det. När vi står här i slutet av 2022, känner ni att ni har utvunnit allting då?
Det finns alltid mer att utvinna, helt klart. Och sen är det här att man styr om också i organisationen. Mycket händer 2021. Men det finns ju vissa eftersläpningar som kommer in eller som har jobbats undan i 2022. Vi ser även saker som vi kommer jobba undan under 2023. Infrastruktur till exempel. Så krävs det rätt mycket arbete att flytta över till en gemensam infrastruktur. Det kan vara både för att det krävs ett fysiskt faktiskt arbete att man liksom ändrar om. Men det kan också vara att man ligger kvar i avtal. Till exempel att det fanns avtal som var på 2 år och på 3 år som måste löpa ut helt enkelt. Så där finns det ju hela tiden successivt att kostnaderna kommer kunna gå ner. Och sen så när det kommer till personal så kan det också visa systemlösningar. A3 kommer ju från en annan resa där de förvärvade ju väldigt många bolag och konsoliderade ihop. Och det gör ju också att det finns vissa saker där, till exempel system som kräver en viss hantering som vi successivt migrerar bort och plockar bort. Och då frigör man också tid till att fokusera på andra saker. Och sen har vi ju ökat och ökar företagsförsäljningsstyrkan, ökar systemstyrkan utan att den totala personalkostnaden ska gå upp. Som också handlar om att vi investerar för framtiden utan att vi ökar kostnadssidan.
Tack. Du var inne lite på det också. Pratade om att här och nu så fokuserar ni mycket på att stärka marginalen och vidtar åtgärder. Och jag tolkar det lite som att det har att göra med prisbilden och att ni kanske börjar höja priserna. Hur ser ni på möjligheten till prisförändringar in i 2023? Det känns som konsument i alla fall som att man får ganska mycket för sitt bredband. Hur ser ni på prishöjningar i 2023?
Ja, och om vi börjar den änden så är det ju inte en tjänst som många väljer bort. Utan för många så är ju en uppkoppling i ett hushåll eller på ett företag helt liksom avgörande. Och är ju en väldigt, väldigt viktig del av ens vardag och blir till och med viktigare och viktigare för ens vardag. Så att vi ser ju inte liksom den typen av rörelser. Utan snarare så finns det ju en rörelse till högre kapaciteter. Om man har en familj, alla tittar på olika streaminglösningar och vissa spelare och så vidare så krävs det ju en hög kapacitet för att kunna axla detta och ha en bra. Skulle det gå ner där helt plötsligt så vet man vad som händer i familjen. Då blir det ju inte lugnare upp förrän den är igång igen. Så att där är det ju tryggt och stabilt. Och sen när man kommer till prisbilden, de 3 varumärkena som vi förvärvade, Thing, A3 och Universal. Universal var ett A3-varumärke. Det var ju lågprispressare. Och de gjorde att den konkurrensen, både när det gäller prisbilden men även då kampanjbiten, den är ju inte lika kraftig nu. Så att branschen har liksom mognat en del med att vi har blivit färre varumärken och därmed så ser vi också att vi kan höja prisbilden och vara mindre aggressiva i kampanj. Och det är ju en stor skillnad om du bjuder på alla nya kunder på en extra månad säger vi. Så det är klart att det har en stor påverkan på kostnaden för den aktiviteten. Så att det är ju en del som vi jobbar med för det här marginalarbetet. Men även titta på befintliga kunder.
Och på andra sidan av marginalen, om man kollar på bruttomarginalen, så har ni också nätverksoperatörskostnader. Ser du någon risk att de här kan komma upp lite nu när vi har ökade energikostnader med mera i samhället?
Vi har inte sett så tydligt än, men risken finns ju alltid. Där är vissa höjningar som kommer ut i början av nästa år, men de parerar vi ju genom att då behöver vi ju gå ut mot kunderna och höja. Sen är det ju inte så givet och lätt för de nätägarna att bara höja priserna. För någonstans så kommer man ju till gränsen där kunder börjar se över vad finns det för andra alternativ. Och då kommer de ju också tappa intäkter, för de är ju beroende av aktiva kunder i sitt nät. Vi betalar för en aktiv kund för en aktiv tjänst. Så att därför så ser vi väl inte att det kommer liksom bli några dramatiska prishöjningar. Men ett annat skifte som vi har noterat som är mer sunt är ju att man drar ner kostnaderna på högkapacitetstjänster. 250-500 gig. Och så kanske man höjer på de här som har lite lägre kapacitet. För då ser vi en förflyttning, precis som det var från 10 megabit-tjänsten till 100 megabit-tjänsten. Så vill vi se en förflyttning från 100 megabit till 250-500 eller gig. Och det är ju bättre för alla. Kunden får mer kapacitet, nätägaren kan få lite mer betalt och vi vill ju också se en rörelse upp mot högre kapaciteter. Så där tror jag det kan ske saker på sikt.
Och det är intressant att du är inne på det här att när man migrerar upp i hastighet så får man också en högre ARPU. Det är det betyder.
Just det.
Hur ser du på, för historiskt sett så har det varit en signifikant drivare till försäljningen. Medan nu här idag så är det kanske lite mer fokus på just prisbilden. Just hur ser du på en 5-årsperiod? Vad är det som kommer vara den viktigaste drivaren? Är det intäkten i sig som kommer ifrån priset på den här specifika megabiten per sekund upp och ner? Eller är det snarare att man migreras upp i hastighet?
Det blir förmodligen en kombination av de olika delarna. Men man kan säga bara för det som vi historiskt kanske har inte varit jobbat lika mycket med, i och med att det har varit lite stor skillnad på högkapacitetstjänster när det kommer till den nätkostnaden, så har själva ARPUM, precis som det säger, intäkten ökat, men marginal och den faktiska intjäningen är högre, men marginalen i sig är lite mindre. Men där ser jag att när nätavgifterna kommer ner så finns det bättre förutsättningar att också hålla uppe marginalen på det och även hålla uppe intjäningen. Och det kommer såklart vara en drivare både när det kommer till att det bidrar till en viss omsättningsökning, men såklart också att man kan bibehålla marginaler över tid på ett bra sätt. Men för oss så handlar det ju egentligen om att se till att vi får fler kunder plus varje månad så att vi växer. På företagssidan finns det också väldigt goda förutsättningar att bli större. Vi har ju idag 75% privat, 25 företag i omsättningen. Och vi ser definitivt att vi ska upp med företagsandelen av den totala omsättningen. Också högre marginaler. Och sen är det de här tilläggstjänsterna. Att vi vill bredda produkt- och tjänsteportföljen för att få fler kunder att använda fler tjänster som ökar totalomsättningen. Men det är också en lojalitetsdel i det. Att man ser väldigt tydligt mönster att kunder som köper fler tjänster tenderar ju att stanna mycket längre. Så det är många saker som man kan få med sig där som är viktiga. Så det är väl egentligen det som är de viktigaste delarna för tillväxten.
Och tror du att breddningen, just att ni kan komma med ett bredare erbjudande till företagsaffären, att det kommer vara inflektionspunkten till varför den affären borde kunna ta vidare fart framöver? Eller är det några andra åtgärder som ni har vidtagit där som bör bidra i en högre kraft?
Man kan säga att historiskt, den starka tillväxten vi har haft, den har ju varit på privatsidan. Företagssidan har växt, men vi har alltid sett att produkt- och tjänstemässigt kan vi egentligen slå vilken operatör som helst. Men där har det mer varit organisatoriska förändringar som gör att vi inte riktigt fått den här farten som vi tycker att vi ska ha. Och nu har vi gjort en förändring där också, där vi har centraliserat hela företagsförsäljningen till Malmö. Eftersom det är ju inte så många möten man går på sälj, utan det är ju innesäljorganisation. Men det blir mycket, mycket högre effektivitet. Man kan liksom ha all aktivitet samlad på ett ställe. Så det kommer ge effekt, kommer dock ta viss tid innan säljarna får igång det, bygger sin pipe, alltså potentiella kunder, och får igång försäljningen.
Mycket bra. Sedan så skulle jag också vilja ställa någon fråga om förvärv. För du var inne på det att historiskt sett så har det inte varit några förvärv egentligen. Och sen 2020 så förvärvade A3 och så var det Thing här med för dryga år sedan. Hur ser ni på förvärvsmöjligheterna framöver? Och även kopplat till det, skulle ni eventuellt kunna gå in i en ny geografisk marknad?
Det är absolut ett scenario. Men man kan säga så här att nu 2023 så är det högsta fokus på att få fart på den organiska tillväxten. Vi vill ha en stark egen motor. Sen är ju A3-förvärv och Thing-förvärv, när det blir ren volym på befintliga produkttjänster, det är ju handen i handsken förvärv. Vi kan liksom ta in volymen på befintlig struktur och få en väldigt god effekt utifrån det. Och sen är det ju, om man vill bredda sig i produkt- och tjänsteportföljen, stärka upp ett ben produkt- och tjänstemässigt, kan det vara intressant. Och sen kan det även vara geografisk flyttning. Att man ser att det finns en marknad som börjar röra på sig. Framförallt om det blir i den här öppna nätstrukturen, vilket vi ser händer på många marknader. Då är det högintressant att komma in tidigt på en sån marknad, precis så som det har varit viktigt för oss i Sverige.
Det blir spännande att se hur det blir i framtiden. Stort tack för att du kom hit idag, Daniel.
Tack så mycket själv.
Tack.
Hello and welcome everyone to this next presentation with Neola. My name is Eric Castle, MedTech Analyst here at ABG. Very happy to have Hanna Sjöström with us here today, the CEO of Neola. And I'll leave the floor over to you right away.
Thank you so much, Eric, and hi, everyone. Really nice to see you all again. And I'd like to tell you about Neola Medical's vision to revolutionize the care of preterm-born infants with our medical technology innovation that has an extraordinary potential to really upgrade the current standard of care for preterm-born infants with our medical device that is continuously monitoring the lungs of preterm-born infants with an instant detection of lung complications. My name is Hanna Sjöström, as I said, and my previous experience also gives a note of my commercial background, which I think is especially important in this type of industry with a very strong commercial focus and a market launch plan for the US. And I'm very happy to be CEO of a medical device company that is in a late development stage. We have developed the world's first medical device for continuous lung monitoring. And we have already now, before a CE mark and FDA approval, sold our first medical device to an EU hospital now generating real-world evidence, and also a paying client of 60,000 euros for our first system. We're also listed at Nasdaq First North Growth Market in Stockholm since 2020, and you find us under the ticker Neola. But now, why invest in Neola Medical? Well, first of all, we have a very large and growing addressable market. The market is growing because we have an increase in number of preterm-born infants being born. This is because we have more mothers being over 40 when they first have children, but also the success of fertility treatments, especially in the US, leading to more twins and triplets, which is one of the causes that this market is growing. And that means there's also a focus on intensive care. We also have a very great need and demand, and I'm going to talk more about that in this presentation. Also, we have a technology that is proven. We have just finalized a large clinical study on 100 babies, which is proving the technology readiness for this product. And also a highly experienced team with a vast experience within the medical device field, and also experience in taking technology innovation to market before. So we're entering a market that is growing and non-cyclical, and it's also underpinned by some very favorable trends. First, we have the growing number of patients, an increase in preterm birth worldwide, which also means an increase in patients with RDS, respiratory distress syndrome, which is a condition that approximately 80% of the preterm-born infants are suffering from, which means that they need continuous lung monitoring. We also have a global market that is expected to grow and to reach in 2026 $2.6 billion US dollars, and also a very strong margin potential, especially within this landscape and intensive care. But also we have the fact that the FDA has seen that medical device towards children are expected to be 10 years behind the development in the same medical device with adults. And this has led the FDA to set in specific projects in order to bring more medical technology innovation to the care of infants in the US. So that's also why we, for example, a very hands-on example, we get very fast response time when we're talking with the FDA. And we also see a huge potential addressable market worldwide. So there is a growing preterm birth, which also then translates into the number of neonatal care clinics increasing around the world. And that's also translating to a demand for technology innovation and a willingness to pay. What is especially interesting is the US market with as many as almost 400,000 preterm-born infants yearly and almost 23,000 NICU places today in the American care. We have also done market research with neonatologists and neonatal intensive care directors in the US showing that there is a clear need for our Neola instrument in at least 70% of those beds. So here you can do a very quick math of the market opportunity. It is also a global problem. We have as many as 1 out of 10 babies that are born too soon, and many in need of intensive care for their survival. So we're talking about 1.1 million babies that are actually dying because they're born preterm every year. And it is because being born preterm is the second highest cause of death for children under the age of 5 after pneumonia. So it is very dangerous to be born preterm today. And that's why also the UN has set a specific goal in their Agenda 2030 that year 2030, no child should die of being born preterm from preventable causes. And that's also why we're getting so much attention from neonatologists all over the world. This is a very big clinical need. And it is a clinical need because these babies that are born preterm get very severe disabilities. As many as 50% of the very preterm-born infants get what we define as severe disability at age 11. They typically get cognitive and learning disabilities. They get a lot of problem with their sight. They also get problems with their movement, maybe need to do a wheelchair, and also chronic breathing problem. Something that if you're a teacher or are in the school environment, you know that many of these children will have problems playing with their schoolmates, but also doing sports as they grow up. So definitely problems that we need to solve, and that's also the reason why we developed Neola, Neonatal Lung Analyzer, our medical device for non-invasive and continuous monitoring of the lungs with an instant detection of lung complications. Now, what can then the doctors and healthcare professionals see on the screen? Well, now they see in real time the lung volume of left and right lung, and they also see the free oxygen gas concentration inside of the lung. This is completely new information to the doctors, and this means that they can monitor for the very first time these babies in real time and be much faster to detect when they have complications. Because if we look at what's in the current standard of care, the healthcare professionals, they have technology, but a lot of the technology that is used today in the clinics are very old-fashioned. It's old, it's invasive, and it's very slow to detect problems. So what you see here is that they have X-ray, they have blood sampling, they have some bits. Some of the modern clinics have started to introduce ultrasound as a way to try to replace X-ray, and that is also because these methods are very invasive to the baby today. If you have an extremely preterm-born infant, they have approximately 1 deciliter of blood in their body, and the guidelines say today that you can only take between 1% and 5% of their blood every day. So of course that this is something that is very then restrictive to the healthcare professionals, and they definitely need other ways to surveil to do surveillance of the baby. And that's why also that we are getting so much attention then for our medical device that is continuously monitoring their lungs. It's non-invasive, which means that we're not breaking any barriers of the skin, which is very important for the neonatologist. And it's also then very fast to show results. So we're updating the screen every second, so it's an immediate detection of lung complication. The doctor then can know exactly also where the complication is, right side or left side. So what I'm presenting here today is a new precision care with really the potential to upgrade current standard of care. Mainly three things that the hospitals and doctors are looking for. First is, of course, a faster detection of lung complications, which then can prevent further morbidity. So all of these problems that I talked about previously, but also a decrease in number of days in intensive care. And this is especially something that the US hospitals are very interested in, and it is because the reimbursement in the US care system today gives a much higher reimbursement for the first 2 days in care, and then it's decreasing for every day. So there is an incentive to really speed up the stay in the clinics, and we believe that we're also able to prove that we can do that. So both a financial and a health incentive for the hospitals to adopt our technology. But also a decreased time for visual observation by the nurses. So today, for the sickest baby, you have in the clinic today 1 nurse per baby, looking at the baby, trying to figure out what's going on because they don't have technology to do that. For the a little less sick babies, you have 1 nurse per 2 babies. So it's a very personnel-intensive care today where we really need to facilitate with new technology. We also have very strong support from key opinion leaders within our field. For example, Professor Dempsey, who is one of the key opinion leaders within neonatology in Europe, he says that the Neola system really has the potential to alter the way that we monitor these babies today, and then also especially looking at them more closely in real time. And as you can see here, reduce X-ray exposure, because it's very fact-based that when you get an exposure of these babies, maybe the size of your palm, to an X-ray on a routine basis every day, there is an increase in getting cancer later in life. So this is something that the neonatologists are really looking to change. And that's why also Professor Dempsey was the first to purchase our Neola system. And he also has initiated an investigator-sponsored clinical study on as many as 100 newborn infants. So that has been proceeding very well this year. The study is now completed, and the subgroup results from the first 50 babies was presented at a congress in Florida in the US this spring. And they are very positive, the results that we see so far. It really confirms that the technology works well for monitoring lungs. And also, it gives us a lot of confidence in the potential of Neola in the future care. We are also getting a lot of publications in the most prominent journals within our field. So Pediatric Research just published an article about our technology here in this summer. So we're getting a lot of traction from clinicians all over the world. Now we have a very distinct path to market launch, which is of course important for our type of product, where it takes a pretty long time to develop the product, but also to go through the regulatory process. So milestones are important to us, and we have always achieved them to date. One of our most recent milestones is that we was certified for our ISO certification in 13485 just a couple of weeks ago, which means that we now have the foundation in order to sell medical device internationally. We're now also getting into a very interesting and commercially focused phase in the company. So now we're starting our technical verification studies and our clinical validation studies. We have had an ongoing process with the FDA for now 2 years, and we have a good understanding of their requirements in order to get an approval. And we're aiming to send in our technical file to the FDA to be granted by the end of next year. So very exciting times ahead. We are also in parallel, of course, focusing on getting a CE mark and have a parallel process for that. When we're coming to market, we have a classic approach with a razor blade model. We're selling one Neola per bed per baby, so it's a system, but also then with disposables that need to be changed daily on the baby. We also know that we're fitting under the existing reimbursement umbrella for neonatal intensive care in the US clinics. Our commercialization plan is focused in 3 steps. First, we have our pre-launch, which we're in right now, where we have sold our first Neola device in order to get publications and a lot of clinical data. Especially important for us is it to get investigator-led studies, so studies that we're not leading ourselves, because that gets us stronger results that the doctors find even more trustworthy. Then we're entering a launch phase. We're focusing on the European urine countries, but also the American market. And then we're heading to scale in, especially China is a very interesting market for us because they're still suffering from their one-child policy, which means that they also need to save the babies that they get. So they have really focused a lot in neonatal intensive care the past years and have a very high standard of care for their babies. We also now have the funds in order to complete our plan. So ABG has led this transaction for us during the past couple of months. We now secured 44 million SEK to the company, and we also, as part of that, got a new 3rd biggest shareholder with LMK Forward AB, who is a long-term investor for us, who is especially focusing on technology that has an impact to change the world. Patent is a very important part of our company as well. We have 6 patent families covering all the major assets of the company, both medical patents and technical patents, patents connected to the product. We also acquired the technology rights to the TDLA's laser platform, electronics platform, that we have integrated into Neola. We did that this summer, and that means that we now all own all relevant patent within the company, which is, of course, very strong in terms of IP security. We're also focusing a lot on preparing our patent portfolio for us being on a more mature market, so that we're starting to build a defense wall as well. In terms of our team, we have made a very big change in our board of directors this year, which means that we now have a professional medtech focused board of directors with a lot of experience, from example, Stille, Getinge, Cellavision, Atos, and also, for example, Hexpool, who are very big in experience of M&A. So we now have a very strong team in place, also from our board of directors. So with that, as a summary, very large and growing addressable market, a great clinical need and a demand for our product, very attractive business model and to secure recurrent revenues, also a proven technology and a highly experienced team. So with that, thank you so much for listening, and I'm opening up to questions.
Thank you, Anna. Interesting presentation. First, I just want to come back to the patent graph that you showed. GASMAS, I believe, is the key technology here, and that expires in 2026. I mean, once that expires, how protected are you from someone else doing the same thing, basically?
So we have built on that medical patent and have another patent that we have approved in China. It's also filed in Europe and the US. That is another version of how we monitor the lungs in the body. So that is one way for us on building on these older patents in order to protect also from the future. What has been most important for us now is to focus on patents that are connected to to reduce some of the offset of the signals, which means that it will be very hard for competitors to actually get our technology to work in an intensive care environment. So we're also protecting us with technical patents related to the technology.
Oh, that's good to hear. And then in terms of collecting data, I guess having a supportive data set is very important for getting a broad reach in the US and also getting approved. But just thinking about FDA, what do you need to prove in order to be approved in the US? Do you need to be better than some sort of predicate device, or is it something else?
So we are doing a de novo application in the US, which means that we are completely new technology, so we don't need to reference us to another technology. So that's a very good first base. And then we need to do an observatory study on preterm-born infants, and we're going to do that in the US. That is also within the field, I would say, a simpler study that we believe that we were able to do during next year.
And in terms of reimbursements, do you think this will be covered by, say, CMS, or would this be something that clinics need to pay for themselves and sort of market that towards parents?
So we have done very in-depth projects when it comes to reimbursement. It's a very important question in order to succeed in the US. And we know that we're fitting into the overall reimbursement umbrella for the clinic, so we don't need a special code for Neola. What is important for us is to convince key opinion leaders within the field to buy the first products, because they have a very high purchasing power, and they will be the one who's really driving the adoption of Neola in the US.
And I follow Getinge as well, and I know that their sort of new generation neonatal ventilators offer some sort of diagnostic capabilities. But do you think ventilators could ever be enough, or do you need this sort of technology as well?
So this technology is, of course, perfect to integrate into ventilators. And that is also what we're hearing from neonatologists all over the world, that they love the technology, they really see the clinical need for it, but in the future they would love to have it integrated into the ventilators. So that's also why we're getting quite some traction from the industry.
Okay, good. And a last question for me. You're focusing now on neonatals, but you mentioned that pneumonia is a leading cause of death within children below 5. I mean, could this potentially be used for those older children as well, or is it just neonatals this could be used for?
So we're developing this specific product for the patient population of preterm-born infants, because the clinical need is so obvious within this field. But of course, we have had a lot of traction from intensive care specialists for children as well. It will be also our next step to try to broaden the patient group also to children. And then we have an ongoing research project with Lund University that is focusing on potentially taking this technology also to adults. It will take many years, I believe, but I think it's very important to start that work now. We saw in the light of COVID, especially the need for an upgrade in lung monitoring and an upgrade in technology in intensive care. So I'm pretty sure that that's where the future is heading.
Okay, thank you very much. That's all the questions I have for you today. Thank you.
Thank you.
And we'll be back soon with Context Vision. Hello and welcome back, everyone, to this presentation with Context Vision. My name is Eric Castle, MedTech analyst here at ABG. Very happy to have Gerald, the CEO, with us today, and also Marcus, the CFO, here in the audience. He will join us to answer questions later on. But I'll leave it to you straight away and come back later for the Q&A.
Thank you, Eric, and welcome everybody to Context Vision. Welcome everybody here in the room, and also welcome everybody on the live stream. It's a pleasure to introduce the company today, and I hope we also have a few minutes left for Q&A, so we can discuss a bit about the future evaluation of our company. As Eric said, I'm Gerald. I had Context Vision as a CEO since August this year. I've spent my entire career in the imaging or medical imaging business, lately with a large global OEM, and I've been in different roles in diagnostic imaging, in interventional imaging, X-ray, ultrasound, medical IT. So essentially, I'm staying in the same business, just changing to the supplier side, which is an interesting insight that will drive Context Vision, I think, aggressively forward, but we'll talk about that a bit later. And to my left, we have Marcus Höckerberg, who is our CFO, a little longer, and we plan to share the presentation or do the Q&As together. So without further ado, I hope this presentation runs. So Context Vision, for those of you who are familiar with the medical imaging industry, you probably recognize all the big names like the Siemens, GE, Canon, Samsungs of the world. But you probably haven't seen or come across Context Vision. And there you're in a good companionship. We're typically white labeled as a supplier to the big OEMs. We're built into their image processing chain, like an Intel Inside, but we don't have the sticker on the system. Our right of existence, or let's say our mission, is to help those bigger OEMs differentiate in image quality. And we do that by providing superior image quality, but also allowing them to create a distinct and characteristic image style. So even if all the components in an imaging system would all be the same, the image that a radiologist would be seeing, or the person who is using the system, would familiarize themselves with a certain style and say, this is what I want to have also in my next generation, right? So it creates stickiness for our customers. And that's what we do with our software in image analysis and image enhancement. And you see we do that mainly for ultrasound, X-ray systems, and magnetic resonance systems. A few figures. For a software company in medical imaging, 40 years is a lot, right? That's the early days of IT. So 1983, the company was founded in Linköping in Sweden. And we did image processing with our own computers, which you can still find in the Linköping Museum nowadays. So we welded hard boards and circuits because the systems itself were too slow for the processing power that was needed. We then went over to PC-based processing, and nowadays everything is either GPUs, so graphic cards, or central processing unit-based inside the standard hardware of a system, which changed a little bit the requirements for us to make sure it's backwards compatible with all the system upgrades, etc. But that can be done quite nicely. We have around 400,000 installations live globally, and we consistently invest and continuously invest into R&D. I mean, that's our core. That's why we keep our R&D office in Linköping, where we have good access also to university and world-leading developers, both IT-wise as well as image processing-wise. And if you look to the installed base, and I can't disclose all the customers, that's mainly under NDA, but 70% around our license sales today is ultrasound, 30% is X-ray and MRI. So if you look to the huge number of installed systems and the continuous investments in R&D, I think it's fair to say that over the years we have created a standard in image quality. So what, let's say, tier 2 and tier 3 customers want to accomplish if they start building their own ultrasound system is to get to that image quality standard that we have building over the years. So you can imagine that we're working with almost all big players in the industry over the years. So it's an interesting network play once you have passed the threshold of a good market or fair market penetration. At least that's what attracted me into this business when I made the move from the OEM. Before we go into the company details, I need to bore you with a bit of technology insights, because I think that helps explain a lot around our license model and also on the uniqueness of our business position, not so much the technology. So this is a standard, and I don't think you see the contrast, but this is sort of the value chain in image processing. On the left, you have a detector, and that creates an electrical signal. It's all digital nowadays, and out comes a raw image. That could be a B-mode image in ultrasound, or after image formation in X-ray or MR. And then there happens a lot of processing before you get to a diagnostic image. And that diagnostic image then leaves the medical equipment, so the ultrasound, MR, X-ray system, and goes into what is called PACS, so picture archiving and storage systems. And that's where there's a huge market of AI companies in the post-processing or post-PACS world. Super busy. So they all want to correlate an image with a clinical finding and help increasing efficiency to the benefit of the patient and the physicians. But we're a step earlier, right? We're hard-coded, built into real-time image processing inside an OEM system, which has a huge benefit in having access to the raw data stream. So you can imagine in real-time processing, there happens a lot of compression, data reduction. We reduce noise, we enhance contrast, we sharpen edges, we increase tissue differentiation. That's what we mean by creating a standard. But then everybody in the industry who starts working on our image needs to live with the reduced data density, if I call it that way, of what has been created. So if you look into the future opportunities, the earlier to the source you are, the richer the information is. So I think it's a fantastic position to be in from a value stream perspective. And essentially, we don't see competitors in our market. So the biggest competitor we have is internal R&D. So a big OEM who doesn't want to pollute their IP and decides to hire people and do it on their own. But again, in a penetration and network play, the insight you have across the market is important and cannot be replaced by somebody who's just building up their own let's say, team for one image style and one system and one transducer style. So there's a lot of knowledge, I think, that comes along with our business model and the team. But the second interesting insight on this tech image is the regulatory perspective. So you know, medical device is a very regulated business. So this entire box here that you see is the OEM system that gets approved by the authorities. Right? So 510K typically by the FDA in the US. So in that sense, we are not a medical device manufacturer. We do not get, or we don't need to validate and verify our software, but we're providing it as a software supply into the entire OEM system, which is then getting certified, which has the huge benefit that our customers don't run the risk that we would lose a certification, or they would run two certification processes in parallel, right? So we're plugged into their system, and then the entire system gets certified, which is, from our perspective, again, a huge opportunity in stickiness, right? So if you're included in the system from a regulatory perspective, it is a very sticky delivery. So the other topic I want to mention here is that you can have objective measurements on image quality, right? Noise levels, contrast, etc. But then there is a huge part of subjective style creation, right? So how do I differentiate to my competitor who might have the same objective measurements? And that's what we call tunability according to preferences. That's what our implementation and application engineers are doing in the projects to create a certain style. So all three here are good images from a clinical perspective, but it's a different taste, whether you want to have more sharper, higher contrast, or you want to have a more noisy image, like Asian countries would prefer this, and European and US styles might be more on this axis. And that style gets hard-coded into our software, which is then implemented on every system that leaves the factory. So we get paid for every unit manufactured, every unit ultrasound, MR, X-ray that is leaving an OEM factory will have our license for the combination of the parameter files and our core engine. And that creates a good perpetual license revenue. So I hope that was helpful in understanding our business model. Now, there's a lot of discussion around AI in the market, right? Everything is going to change now with machine learning and deep learning. And we're basically running algorithms on our image enhancement. 40 years ago, nobody talked about machine learning. So it was humans and statistics that created the algorithms. But what we can see today, and that's how we are using and embracing the power of machine learning, is to make our algorithms more powerful, right? So we can use more complex models and run more complex models, still staying cutting edge on the processing power of an imaging system. So we combine, let's say, the robustness of a man-made algorithm, real-time processing, with the power of AI in terms of better enhancing the diagnostic image. A second opportunity of using machine learning in our business is to do these tuning exercises, which our engineers are doing very professionally, but takes a while to automate that, right? So we can use deep learning to standardize human perception. What are different styles, right? Not every radiologist means it is a style, but you can understand commonalities. And in that sense, we could help our OEMs better address their target groups. And it could be, let's say, tunable looks, but it could also be auto-tunable to different anatomies. So it could make scanning significantly easier. And you don't have to do all the buttonology on the systems, but machines can improve efficiency. And that's a big topic now, especially through the pandemic. Everybody learned that throughput and efficient use of staff is much more important than just the diagnostic quality itself. So that's a huge driver for us in the market. But again, the secret from our perspective is a smart combination of machine learning and algorithm-based processing, and not an approach where AI takes over everything. Just two images. Here is sort of the technical performance, right? And this is a beer, by the way. It's not a dog. Unprocessed and processed with our Altomira. You see on the left-hand side, it's difficult to read. On the right-hand side, you can better see the anatomy. And here again is an example more of the styles, right? Unprocessed to the left, but then all the right images are good. But it's a question and matter of taste, which one you prefer. And this beamer doesn't really show, I think, the resolutions that you would need to be able to judge, really. So if you want, can buy our office. It's just 2 blocks down the road. We'll have clinical screens, and you can better look at it. So we felt we should also talk a little bit about the company performance and journey. And Marcus, I would love to hand over to you to talk a bit about that topic, and then we can together take Q&A.
Thank you, Gerald. So, as Gerald said, we have a long history, turning 40 next year. And during that period, we have been a very stable, long-term growth cash machine, I would say. The growth is, on this picture, for the last 6 years, 5 years, is about 6.6% CAGR, compounded annual growth rate. And we said that 40% of our employees are within R&D. And we are trying to be in the forefront of image enhancement all the time. And the way that we do this is to continuously utilize the power of the R&D staff that we have, and to make those ideas and research and product development into marketable products, and continuously release those to the market. When it comes to the share price development over the years, as you know, we've invested quite heavily in a product that's now a company called Inify Laboratories. And that was a long time ago, a couple of years ago, when we first discovered digital pathology, and grow that from a simple idea to a product to a business, a full-grown business. And they are currently setting up their lab here in Stockholm and running the first operation or analysis. But during this time, the share price took a leap up, I would say. And in the beginning of this year, we paid out the dividend in ContextVision's history. For the first time, I think, in the ContextVision's history. We paid out the company Inify Laboratories to the shareholders. So that was a dividend worth about 30 million SEK. And now we have Gerald, new CEO, in place, and the share price looks like it's just waiting for something to happen, something to look forward here. Thank you. Gerald?
So we see this really as an example, Marcus, thanks for putting up the slide here, that we are very experienced in using AI, right? So the digital pathology business was an AI application for microscopy to help pathologists run the diagnosis. So we know how this works, but it ended up in a different business model and different regulatory environment as a lab. So see it as a proof point that we have in-house the capability to use AI in the way that I showed you earlier. And I think the one biggest opportunity in our market now is to focus on handheld ultrasound. So that's a market that has been projected to take off rapidly, but it has been holding flat, not flat, but a middle single-digit growth, let me put it that way. But it expected to add, 100,000 units going to be shipped. And the biggest benefit is here that you have a vastly different addressable market, because it's not a radiologist or a trained sonographer that is going to use those equipments, but it can be any nurse, right? It can be pregnancy control in Africa by unskilled professionals. It can be screening. It can be early diagnosis. It's an unharmful technology, but we need to support OEMs to make it easier, more efficiently to use, so we can use AI to help automate screening, selecting protocols. And frankly, the biggest challenge so far was that for the price point, the image quality was also low, but it was so low that it wasn't useful for significantly relevant diagnosis. But if you enhance the image quality to get to a level where you can certainly now start replacing mid-tier card-based systems and you run reasonable diagnosis and do that in a much broader way, I think then both OEMs and for us, it's going to be a very successful journey together. Our usual standard lead time for projects is somewhere between 2 to 3 years, right? So our implementation maybe takes 2 to 3 months, but you have the evaluation phase up front, and then there is typically a 6 to 9 months freeze phase of releases for the OEMs before they start selling the systems. And we have launched our product, it was on Marco's slide earlier this year. So we've transferred all our knowledge and processing power to be able to run on iOS, Windows, Android. So it's released as a commercial product. But until it hits the market and we follow sort of the release timelines of the OEMs, usually you can expect another 2 years to pass by, right? But the market, you see, is going to grow by 45% by 2026. So as we are paid by the unit being shipped, it's a very interesting opportunity for us in terms of the current business, and it's even more interesting to help automate and improve the diagnosis in the future. So once we And the strategy is to get a good foot into a broad market penetration with the current versions that we have, and that allows us to address future releases into an installed base, which is significantly easier than initial sales. So brief summary before we go to Q&A, and I hope I didn't forget to mention the different points. I'll not talk you through it, but for the ones on the screen, or if the presentation is distributed later on, you can find a nice summary of who we are. We didn't talk maybe about profitability. I think we're a very profitable company from an investment perspective, 44% EBIT last year. We found now a good new baseline after the spin-off of Inify. You see that in the quarterly reports. It's going to be a similar ballpark, I would say. A market cap in our perspective, as Markus mentioned, we should have a discussion around. I think there is quite some room to grow if you see the opportunities that we're having with the capabilities and the strategy on really focusing on the core now, right? We've done a lot of investments in this digital pathology, and that has defocused a bit, and maybe the future story was too much around that business, whereas we underestimate the enormous opportunity in the core business. The other topics I also mentioned, we have an average market growth 4.5% versus our growth of 6.6%. I think we can grow and are entitled to grow substantially stronger than the market. For next year, we see a roughly 3% growth of the addressable market, so it's slightly lower, but it really doesn't matter so much if you look to the potential we have moving forward. So I would stop here and rather open up for questions and then be focused on answering them. But also feel free to reach out to us if we don't address all the questions after the meeting, or sending me or Markus an email. Eric.
Very good. Thank you very much. So I guess elephant in the room, you mentioned that OEMs are, your competition is really in-house R&D from them. There's really 3 big ones that shares the market. What are the risks really of them developing competitive products to yours?
Yeah, so let me address this straight away. It is maybe 3 brands, but having worked on an OEM side before, sometimes on purpose, you have different teams with different sourcing strategies and different partners within that one big OEM. So the one big OEM might have an X-ray business, an ultrasound business, and our business. Within ultrasound, they may have different platforms. They may have handheld, low-tier, mid-tier, high-end. Each of them might be a different factory and a different R&D team. So if we say we're working with all OEMs out in the world, doesn't mean we're on all platforms, right? So there is still room to grow. But usually it's impressive when we come in, let's say, on the mid-tier, and we show that we can get a mid-tier image quality to a high-tier look and feel. Then we create our own demand. Then we also need to lift the performance of the premium, right? And it could be vice versa, that you want to reduce the spread. So I think to answer your question, competition is not just on the high-level sourcing for one OEM, but it's really the hands-on image quality development teams, and that's different in every unit. And for us, it means there's still room to grow. If we would be able to disclose what platforms we are on, then you could estimate much better how much we're still able to grow. Okay. Addressing more platforms.
I understand. So many customers under 3 umbrellas, basically.
Yes.
But then if we think about customer concentration, is there any particular customer that represents a huge part of the business?
Yeah, so let me answer this way. Historically, the strategy, and I think that was good, was to start with tier 1 customers. Don't take the easy ones that are so bad in image quality that just need something urgently to be accepted in the market. We on purpose addressed tier 1 customers to develop together and learn, right? And then sort of learn also how to better differentiate and then address other tier 1s, but also provide opportunities for tier 2 and 3. And I mean, that's we get those questions also from OEMs. If we work with you, we share our knowledge, and you're going to, you know, provide that to the rest of the market. But you know the paradigm of market of lemons, right? The more transparency, the more broader penetration you have, the better it is for the entire market, right? And that's what's happening here also. It creates demand for us to perform even better for other tier ones, right? And you can't overcome bad components that are also included in the imaging chain. So we haven't seen that really as an issue or as a conflict, right? We're also not losing customers. I'm not aware of any big loss, or let's say from a tier one level, where the value proposition has gone wrong.
And coming back to how you make money with the licenses, I mean, you said that there's chips with basically every system that's out there, but there's no optionality for end customers to say that they want this. It's just basically everyone who orders one of these MRIs or X-rays, they get your product.
So we can certainly do better from a marketing perspective and from a segmentation and configuration perspective. But let me say what we do today. So we're offering implementation and customization services. So that's engineering hours that are billable. We are offering perpetual licenses once the software is embedded, and we offer service contracts for updates, upgrades, and regular maintenance. So there are different revenue streams that are coming in. In terms of configuration, you have to customize the licenses for every combination of a detector or transducer and an imaging platform and a clinical application. So you can build your matrix on clinical application, number of detectors and platforms, which are specific licenses, right? And then we license, it depends on really the license agreement, whether we cover all clinical areas, whether it's tied to one transducer, and that also explains different pricing models behind the licenses. So it looks like there's one toolbox for everything, but if you scratch under the surface, there is a huge opportunity to customize and have a pretty broad range also of leveraging the different value benefits across the platforms.
And for this handheld device, is that the same price point for that license as there is for basically every other machine? Because you mentioned, the price of an MRI, for example, that's way different than the handheld.
Yes, so it's an entirely different product, right? We also had to make sure that it works on the different platforms. It's a very different maintenance model. You need to make sure it is updated according to every iOS or system release, if you want. It is built, and the business case on building it was on a volume market. So we have anticipated the current volumes out on the market, but we would extremely benefit if the market would really take off. So it's a different pricing position, but I think, or I hope, and I guess we've done the right choices on positioning it.
And if you look at this market and your potential growth for you, if we look at the base diagnostics market, I think that grows 4 or 5% maybe in units over time. And then you potentially, I saw that you developed and launched a bunch of products. Are you able to raise prices on top of that by adding more features and that stuff to sort of grow above that? 45%?
Yeah, I mean, the medical market, right? So it's a constant pressure on. There's no more money from the governments into the system. So the whole imaging market is a price squeeze market, an efficiency gain market. So everybody asks for volume discounts over a year. The more license you sell, the more you should decrease your price points. The only way you can overcome is come up with new functionality, new features that deliver additional benefit. And that's what Marcus showed over the years. We constantly have to release new products. And typically lifetime of a platform implementation, maybe around, in ultrasound, 5 years, and in the other imaging modalities, it's a little longer. And that basically dictates the release cycles if you want to manage price increases. Right now we have a little different situation on the inflation, so that's certainly also a driver. But in general, in the market, you see that the market needs to eat up a lot of the efficiency gains. So salary index is going higher than the medical equipment price index, and that squeeze the industry has to take up, and we're sort of in that boat together with the OEMs. But I think we managed significantly better if you look into our EBIT performance, at least compared to some of the OEMs itself.
And I've heard some estimates that you have about 90% market share in your relevant niche. Is there any potential to expand that addressable market so that you could, grow above market rates going forward?
Yeah, I mean, there's huge opportunities. We're just limited right now in number of people, but we're having quite a strong growth strategy, and we're going to do investments next year also in addressing those opportunities. So there's different modalities you could think of, right? Typically, we're very good in low quality images, and there are other modalities out in the market that are significantly more expensive, but that are not yet looked at. But there is, just to mention one thing, not saying we're doing it, but to give you an example, is for instance the nuclear medicine market, right, where there's shortage of supply in FTG, so radioactively sugar that you use, and you want to work with lower activity, and then you need to live with lower quality images, but you still want to have a diagnostic image to provide service to patients, right? So there's a huge market now opening up for us with the supply challenges, logistic challenges, staff challenges. So that's one thing. The other thing is really looking into efficiency, using more machine learning in supporting other elements on the image processing chain for our customers. So yes, I mean we're not tied, let's say, to image analysis and enhancement as we do it today. So we could also think left and right, and we could think about expanding to different use cases. We also do by the way, veterinary market, which is also growing stronger than we had initially anticipated.
Okay, thank you, Ariel. So time flies when we're having fun, and it seems like we're over time already. So thank you very much for joining us here. Very interesting to listen to.
Thanks, Eric. Thanks, everyone.
Hi all, my name is Daniel Hauglam. I'm an analyst at ABG and I cover StrongPoint amongst other tech and consumer related companies. Today we have with us the CEO of StrongPoint, Jakob Teurbach. He'll be taking us through a presentation and with that I give the word to you, Jakob.
Thank you so much, Daniel. So I'm going to help you understand as investors StrongPoint. And before we even move into the slide deck, I want to start with something that I think most of us are able to relate to, in particular after COVID, and that is travel. So most of us in the summer holidays, unless we're in the archipelago or in the beautiful Norwegian sea, then we go to the Mediterranean. Personally, I like to go a lot to Spain. And when I go to Spain, I also have this nasty habit of going to grocery stores. And going into a grocery store in Spain or France or Italy or Greece for that matter, it's a little bit like a time capsule going back 10, 15 years compared to what the grocery stores used to be like in the Nordics. And why do I start here? Well, I start here because that's a major opportunity for a company like StrongPoint. We have a set of technologies that we take for granted when we go into a grocery store or when we shop online. That's the potential that we want to take onto Europe. So if we may go to the next slide, just to sort of set the stage for StrongPoint. Well, first of all, we are a company providing solutions to grocery retailers. So that means about 84% of our revenue stems from grocery retail, not sort of other kinds of retail, which means that we are in a very non-cyclical market, a very resilient, robust market. And you could almost argue that regardless of what happens in the world, you need food and beverages, and that's the market that we serve. Lastly, and a point to sort of pinpoint is that we are based out of Scandinavia. Most of the technologies that we have in our portfolio are Norwegian or Swedish by nature, and the high labor cost that we have had and have in Scandinavia has also led us to introduce new technologies that are improving the operations in the store or online. And it's exactly those sort of leading efficiency solutions that we see a big demand for, both in, of course, the home turf market, but also elsewhere. If you go to the next page, please. So briefly about StrongPoint, just so we set a stage. We're not a new company. We are a mature company with 35 years in business. We're listed on the Oslo Stock Exchange, and over the past 4 years, we have worked to position ourselves as a pure retail technology company, focusing on the grocery sector in particular. We have 8 markets: Norway, Sweden, the 3 Baltic countries, UK, Ireland, and Spain, where we have a full sales, service, and support organization. And then we're serving additional markets with partners. Why is that important? It's important because in those 8 markets, we're able to not just push a solution, but also give the customers the confidence that we will introduce the solution, make it work, make it work over time, and then again be able to reinstall solutions. But it also gives us a very nice part of the economic value we're creating, not just by on the sales business, but also on the sales service and support. We're about 1.3 billion Norwegian kroner run rate as of now. And if you were to cut away the 2 businesses that we divested over the last 4 years, namely labels, cash security business, our retail business would have grown by 60%. So it's a rapidly growing business that we have put in place here. So what do I really mean with retail technology or solutions that we offer? So if you go on the next page, I'm going to start off then with some of the trends that are leading to the solutions we offer. I know one of my friends, Magnus Larsson from Pricer, was presenting Pricer earlier today. We're a great partner of Pricer. And he was talking about, amongst others, the importance of the inflationary pressure, the price changes that are happening, that are driving lots of price changes, and as such, making the case for electronic shelf labels a lot more viable. Secondly, staff. It's just very, very hard to get staff, and staff in store needs training. With the more and more sort of complex tasks to conduct, you also need solutions to help you train employees fast, and ideally be able to have solutions that lower the manning in total. And then lastly, e-commerce. Although you could argue that e-commerce right now for the past few months have received a sort of a dip, this is very much a market that will be growing over time. And as an example of that is the announced stock exchange message this morning with a major US grocery retailer where we are introducing 20 lockers just as a pilot. So e-commerce is very much alive and kicking, and for major grocery retailers that are able to see through the temporary downturn that we're facing now, also indicates that the e-commerce will continue to grow. So with all these trends, I mean, there are lots of different solutions. With what we do know is that technology is going to be a vital part of the solution to these challenges, but also opportunities that arise. So then concretely on the next page, what does StrongPoint offer? And I have 2 pages here. One page is simply taking the roof off the regular grocery store. We offer electronic shelf labels from Pricer in the 8 markets that we serve. We have developed our own self-checkout solution that is second to none and market leader in the Baltic countries. We have a cash management portfolio that is very much alive, still in Norwegian, Swedish grocery stores, where it's more about maintaining and managing the development of cash as we see it, but growing massively in other countries, including Spain, South Africa, and others. And I'm not sure if I'm going to go through all the solutions. The point being, we have a number of solutions here, from protecting high-value items with VenSafe, scales to ensure that you actually get what you're buying, and then even also humanoid robotics, where we have invested in a Norwegian-based company called Halodi Robotics to do repetitive tasks, for instance, restocking. If we then go on the next page, we're looking at some of the e-commerce offerings that we have. I believe we have probably the most comprehensive e-commerce portfolio out in the market. We have a best-in-class in-store picking solution. This is, by the way, the picking solution that's being used by Swedish grocery retailers when you see picking in store today, reaching efficiency levels of 240 items or more, which is just unprecedented in the industry. We have a dark store module that we use for utilizing the same picking solution, but then in a dark store, not a regular store. And we even now have complemented our solution with a partnership with AutoStore, the Norwegian giant, the second largest IPO in Norway since Statoil, to provide the AutoStore solution to the Nordic market, and also recently announced the UK and Irish market. So great opportunities in the picking. What we also offer is the full range of last mile solutions, stemming from both grocery lockers, again, Sweden being probably one of the highest penetrated countries in the world with regards to grocery lockers, home delivery solution, as well as in-store picking solution and drive-through solution. So we offer the whole range of e-commerce logistics solutions for grocery retailers. We can move on then, because I hope then for any new listeners to StrongPoint, then you know a little bit about what StrongPoint does. And I wanted to move from here to talk about the StrongPoint sandwich. After all, we are in the grocery business. And so when we talk about the bread and butter of StrongPoint, those are really the in-store solutions, the mature in-store solutions that have been around for a long time, whether it's our cash card solution, self-checkout, Vensafe, electronic shelf labels. This is today providing us a EBITDA margin of 11 to 12%. So we have a very solid, profitable business in the in-store solutions that we call bread and butter. But everybody knows, in particular Norwegians and Swedes, that you can't just have bread and butter, you need some topping. So if you push one more button, then you get some topping on the sandwich. And this topping is really our e-commerce solutions. This is the picking solution that is by far the market leader in Sweden, that we're now working to get out to additional economies out there, Spain being a notable country as well, and as I said, the US with interesting grocery customers there. Today we're investing deliberately and significant in e-commerce. It's not yet giving us sort of a positive EBITDA, but of course, with the growing market, with the picking solution in particular, that is yielding a payment per pick or payment per order, this will be very, very profitable business over time. And then also lastly, if you want a proper sandwich, you need some sauce on top. And the sauce on top, that's really the tomorrow's solutions. We're not just stopping and being satisfied with what is in high demand right now, but also looking ahead. So when we are, for instance, working with Hello the Robotics to provide a picking solution or a reshelving solution for stores, we know that that is something that will be in demand over time. We're also, of course, examining the next frontier of checkout solutions. So moving from man checkout to self-checkout to even autonomous checkout solutions. We're, without revealing too much today, something we're also exploring with partners. So that's the StrongPoint sandwich. I hope we gave you a little bit of flavor of where the profits are coming from today, where the investments are being spent, and also where we're heading in the future. If we go on the next page, please. One area in which I'm very positive about on behalf of StrongPoint is the white space opportunities. So on this page, you will see the different countries listed on the one-hand side. You'll have the grocery chain penetration. And as you will see, we serve all the grocery chains in Norway, all the grocery chains in Sweden, and all the grocery chains in the Baltics. Whereas, we're newly acquired UK and Irish market, we are very far from having a full penetration. And the same in Spain. Two mammoth markets. And just to put it in perspective, right, a company like Tesco's in the UK is 3 times the size of the entire Norwegian grocery market. Spain with Mercadona, twice the size of the entire Norwegian grocery market. So these, of course, are exciting and huge markets, not just because of size, but also because of the time capsule analogy that I used in the beginning. And you see that on the solution penetration, which is the next column here. So even though we have a 100% penetration with Norwegian, Swedish, and Baltic grocery customers, we're very far from having a full penetration of the solutions. So as examples, I mean, in a country like Norway, there's still ample opportunity for the Vensafe solution, that protective solution for high-value items. These self-checkout solutions that you see in the Norwegian markets, where you're still struggling with sort of, say, getting fruit and vegetables correctly scaled. Sorry, that was just a team celebrating a stock exchange message that we should have been South Africa with 250 cash cards. So cash is not dead in that part of the world. But beyond that, in Norway, what you have is of course e-commerce. E-commerce in Norway is to the most extent being defined by a pure player, Oda. So clearly, I mean, all the Norwegian grocery chains will be looking at some sort of e-commerce offering in the future. Not going to go through all the countries, but take Sweden as well. Still lots of opportunities in e-commerce, although Swedish retailers have been a lot faster than Norwegians to move on e-commerce. There's still a lot of automation to be done in the market. ESLs likewise. The Pricer sales have been going very good this year, but in terms of penetration, it's far away from the Norwegian penetrations we see. Of course, if you get down to UK, Ireland, and Spain, their solution penetration is even less, right? And now that we also have out the cash management sales in South Africa, I think it's fair to say that cash in Spain, however old-fashioned it sounds, is still about 60% of all the transactions, which means there's a huge amount of cash that needs to be handled. We have a very, very mature technology to handle that. Same goes with the e-commerce price labels, electronic price labels, and self-checkouts. These are all solutions that I strongly believe that we can take from the Norwegian, Swedish, Scandinavian market into the larger European markets and create lots of value. So that's the white space opportunity in short for a company like StrongPoint. Could I move to the next page, please? Some 4 years ago, we set forth the 2025 ambitions, and those were threefold. One, to provide to create a pure grocery technology company. And with the divestments and acquisitions we've done, we are very much on that path. We have a 2.5 billion kroner revenue target, up from today's running 1.3, and an EBITDA margin target of 13 to 15%. So how are we steering towards these things? Let's move to the next slide, please. Well, some recent news that we've also seen very well appreciated in the market, not least from our customers, are some of these recent news. Number one is the fact that we saw a year ago became a AutoStore partner. And about 6 months ago, we landed our first AutoStore deal with Collecare, the Norwegian international, I should say, 3PL company. But then also now are installing the world's first AutoStore with 3 different temperature zones. So not just ambient and chilled, but also frozen. And that is in itself it's a world news. This is the first time in the history of AutoStore, and I think in the history of similar retrieval or automatic storage and retrieval systems, that a frozen solution is being installed. That means a lot for grocery retailers that obviously needs to handle all the 3 temperature zones. We've been getting a lot of attention after that, and right now the focus is on making sure that this first installation is a true success. Secondly, it's the expanded partnership with Pricer. We have jointly in Norway, Sweden been very successful, Baltic likewise, but now we've extended that to include entire Spain, but also UK and Irish market. And you can tell by well, I have a big smile, but I think Magnus has an even bigger smile than I have. We are very, very prosperous about what that could yield, in particular in a country like the UK, where the ESL or electronic shelf label penetration is very low, whereas the conditions are certainly a place to start using ESLs a lot more. And also with the acquisition of the company called ALS Global in UK and Ireland, we were also now recently granted the AutoStore distribution rights for this market. So lots of exciting things happening that will have a significant impact on the growth of StrongPoint in the next few years. I think we have 1 or 2 more slides, and then we'll give the question or the answers, or send the word over to you, Daniel. But want to round off by why should you invest in StrongPoint? Well, I think number 1 is the fact that it's, to the extent you can use a word like safe. I mean, this is a relatively safe market we operate in, the grocery market. It's stable, it's growing, without very many exceptions. They're highly profitable. It's not like we have any credit risk outstanding with any of our grocery customers, and you kind of need food and beverages. Secondly, we're not a new kid on the block. We've been around for many years, and that sort of customer relation, that trust that we're having with our customers, also provides us with the opportunity to bring new solutions to the table. And of course, in that respect, it also helps to have a very solid balance sheet. We are a trustworthy company also in that respect. We have today 0 debt. So there's 0 debt. There's inflation or interest rates can go up as much as they want for our sake. We have 0 debt. And lastly is the growth. We see a significant growth opportunities with existing customers that we have in the 8 markets we are, but not least growing with new customers and with additional solutions, and then most notably in the new economies, I should say, UK, Ireland, and Spain. And I believe that was the last page before there is a thank you page.
Great. Thank you, Jacob, for taking us through all those points. I have a couple of questions that I've plotted down. So I think we can start basically at the beginning. So talking a bit about trading conditions, because you talked a bit about how the grocery retail segment might be a bit more robust and non-cyclical than the other retail categories. So I was just thinking, could you maybe add some color on how have you seen customer demand develop this year versus other years, and how do you see that maybe developing going forward, or at least what are your customers saying?
Well, I think, if you look at the grocery market as a whole, I think you see across the board a general shift towards discount and private labels in a world where household financials are being strained. So of course that also impacts grocers. I mean, we see a lot. I think it's fair to say we see a lot more sort of detailed needs to understand solutions before you end up with the investment decision. But that said, I mean, most of our, if not all of our customers in the grocery space are, they're not newcomers. They've been through downturns before. They're typically very financially strong, resilient, and see this also as an opportunity to get out stronger on the other end. So I think, yes, there's some hesitations on investments, but in general, this is proving very well for grocers. Just the only other, it's fair to say that, moving into something new, say e-commerce, I was almost like expecting that to take even longer. But again, I think, the announcement that we posted this morning on grocery lockers in the US is telling us that although the market for e-commerce is looking somewhat harsher in general, the retailers see this as an opportunity to position themselves.
Thanks. Then I think we can move a bit over to your expansion into some new markets. So you bought ALS earlier this year, went into UK and Ireland. Could we maybe talk a bit about the potential here? Obviously, you did show a bit on the penetration slide. I don't know if you can go back a couple of slides to that slide. It was the white space opportunity slide. And I just wanted to touch a bit on looking at basically the coverage and the penetration here. So if you start, we can start on the right side with the solution penetration, obviously low in some of the new markets. where should we think this can stabilize over time? Is it fair to think that it could go towards, let's say, 100% over time, or is it more like, do you think will stabilize at some lower level?
Well,
how are you thinking about that?
Yeah, I think I think first of all, even if you look at sort of the mature market for StrongPoint, Norway, Sweden, and the Baltics, I mean, there's still a lot of white space, right? Sometimes we think that we're fully penetrated the market. We have not. So there's lots of opportunities even in those areas, and that will provide us with the relevance to customers and a nice growth also in the future. I think obviously that the big upside here lies in the much larger economies, UK and Spain, right, where we are a lot smaller. And what I would describe the situation like today is that in the UK and Ireland we have a platform with the ALS acquisition to grow. We have a platform to take our solutions and some of the most premier third-party solutions like Pricer, ESLs, and AutoStore into this market. So that's a huge opportunity, clearly. Whereas in Spain, I think we have additional opportunity to build that platform even further, right? So we're not sufficient. We don't have a sufficient organization today to cover that market as we should, and that also provides us with additional opportunity to grow in this very exciting market.
So then you didn't talk about this in your slide package, but I was just thinking we could maybe touch a bit upon the margin, call it outlook into next year. Obviously, you typically don't guide on anything, but if we could just discuss this year, we've seen call it quite big contraction of your reported EBITDA margins, but noting that you put all of your investments through the R&D on the cost in your P&L and not under CapEx. That explains a lot of it. So in the Q3 report, I think you said that you will be slowing this a bit down given what we're seeing on the e-com side now. How should we then think about the margin picture going forward there for the group as a total?
Yeah, no, I think so. Thank you for enlightening the listeners that we are in that respect conservative, costing all the expenses. So you won't find any big items on the balance sheet. But regarding the development of our margin, I think what is fair to say is that what we have disclosed is the fact that we do on e-commerce see a very nice margin. And that was, of course, during the COVID, very good for us. We saw our part or share of revenue going from 5% to up to 13% of the total revenue. With the COVID contraction and with the war and the uncertainties that stems out of that, it's sort of back again to 5-ish%. At the same time as we have been significantly investing in partnerships, in new product development, in sales resources, and that has sort of impacted clearly the margin levels that we have been able to achieve thus far in 2023, and that's sort of the reason why, if not sort of contraction, at least is a shift of resources to where we see there's being a big demand. For instance, in self-checkout or even in cash management solutions, we see there's a bit of a revival right there temporarily. Going forward, we still believe very much so in e-commerce. It's anybody's guess how fast it will recover, but I think if you look at the long term of e-commerce penetration across different across different retail sectors, the arrows go one way, and that's up. I'd go as far to say anybody that believes that e-commerce will disappear is as wrong as saying internet would disappear in the 1990s. It's not going to disappear. It's going to go up, and I think today is a unique opportunity to help our customers by making that e-commerce offering profitable. And I would like to sort of hail some, I wouldn't name drop, but hail some of the Swedish grocery retailers that are achieving this by having a very highly efficient in-store picking solution and a locker solution that provides the most efficient, cost-efficient solution for e-commerce. And you can just imagine taking something like this to the UK or a Spanish market. That means a lot, and I think the market is ripe for that in the years to come.
Great. I think that basically rounds up our time this time. I want to thank you a lot for taking the time, Jacob, and we look forward to the next quarterly presentation and following you into 2023.
Thank you. Pleasure is all mine.
Hi everyone, and welcome to the next presentation. My name is Daniel Torsson, an analyst at ABG covering IT and tech companies. And the next company presenting for us is Invisio with CEO Lars Højgård Hansen. So I let you start off, Lars, presenting Invisio, and then I'll have a couple of questions in the end.
Thank you very much, and welcome everyone. Invisio is a personal protection company. Our aim is to protect the many professional men and women that work in very difficult surroundings sometimes to protect us all in society. Next, please. So we know from statistics that a lot of these important occupations has risks to them, and especially when you work in high noise surroundings. Statistics says that in the US, for instance, more than 30% of police officers have work-related hearing injuries. For firefighters, it is more than 40% that have hearing loss caused at work due to very high noise levels. And for soldiers, it's even worse. More than 3 million US veterans have work-related hearing loss, and in fact, it's the largest compensation area related to military veterans in the US. And the picture is very similar in other parts of the world, although the statistics are not as well documented. We know that many of these professionals suffer hearing-related or job-related hearing injuries. Next, please. And it's not only the hearing loss and the injuries to hearing that is a problem, because when you have a hearing loss, it also often affects your quality of life. Many veterans that has tinnitus also have anxiety. Some are hit with depression, and even a majority that has both conditions. And this is, of course, leading to a low quality of life when you have this type of injuries to cope with. So not only is it a high cost to the individual to be met with hearing injuries, but it's also a high cost to society. Next, please. And so apart from hearing injuries and the hearing protection that we provide for that, we also work with communication solutions for the same very high noise and critical environments. Many professionals, including police, law enforcement, and military, often work in high noise environments where it's difficult to communicate clearly, and sometimes you are at risk of making the wrong decisions because you cannot hear clearly what your teammates are trying to say to you. So the lack of communication increases the risk of occupational injuries and incorrect decision making. Next, please. So INVISIO has the technologies and the product solution to solve these problems. We have been at this for more than 15 years, and we have a range of technologies and solutions that help solve both the hearing problems and also the communication issues. We work with very advanced microphone technologies that allow for crystal clear communication in high noise. In fact, INVISIO is part of the 50-year heritage of hearing technologies in the Copenhagen area called the Danish Sound. So we have a long experience and a cluster for hearing technologies in the Copenhagen area that we benefit from. And we are able to apply that into our area for hearing protection. We provide the users not only with the possibility to speak, but also with industry-leading hearing protection, both with active and passive hearing protection for very high noise environments in the form of different types of headsets. It can be in-ear headsets, but also over-ear headsets, as you see on this picture. In addition to the hearing protection and the communication possibilities, we also give the users what we call full situational awareness, which means that even when you are hearing protected, you can still hear what is going on in your surroundings, so you are still able to understand what is happening around you. And last but not least, we are able to interface our type of equipment to a variety of other equipment that gives the user audio information. This means, for instance, what we call a radio, which is basically a walkie-talkie, intercom systems, mobile phones, computers, anything that they use that gives them audio information can be transferred into our system, so they get the information clear and loud when they need it. Next, please. So INVISIO has, during the last 15 years, become the global leader in communication and hearing protection systems for these very demanding environments. We are based in Copenhagen, but we have our sales offices also in the US, France, Italy, UK, and in Thailand for the Asian region. We operate two product brands, INVISIO and Racal Acoustics, which is related to a company that we acquired a couple of years ago. From the beginning, our success model has been based on a very close collaboration with customers in product development, so that we are really focused on what the users need and what type of solutions that are really helping them make a difference in those environments. We have, over the past 15 years, obtained a portfolio with long-term agreements and programs with customers globally. Now, this industry is a niche industry, but it's characterized with very long-term agreements, often with the customers. It's normal to have agreements that are 5 to 7 years and maybe even longer sometimes. Our sales is normally direct sales to customers, but also in key markets with long and trusted partners. And our business model is quite easy to and simple to understand. We do R&D and sales marketing in-house, but our manufacturing is outsourced. We work with some very large manufacturing partners, mainly in Europe, to manufacture our products, and this means that we are able to very quickly scale up and down depending on the demand and the orders that we receive. We have for many years now been a growth company with sound profit levels, and we are listed on Nasdaq Stockholm since 2015 on the mid-cap list. Next, please. So our product offering today is quite broad. It includes a number of solutions for different type of scenarios. On the upper left-hand side, it is our personal systems for use on the ground, where we have a range of solutions consisting of different type of headsets and small boxes that we call control units that are then connected to the communications equipment that they have. And these are for military users, for law enforcement and police, and for other types of users, and for special scenarios as well, for parachuters, for diving, and for other types of application. And on the upper right-hand side here, you see an example of a headset from the company Racal Acoustics that we acquired a couple of years ago. They have for several decades been the market leader for hearing protection in very high noise vehicles, like helicopters, like ground mobility vehicles, like tanks, and even for ground crew operating in very high noise. So this is their area of specialty when you are in and around vehicles. Now lately, meaning a couple of years ago, we started development and introduction of a groundbreaking and very innovative new product solution, which is a portable intercom that you see on the left hand lower side here. It is a portable system, as said, with the size of an A4 paper or a tablet, more or less, and you can use it in different types of vehicles, like helicopters, boats, and light mobility vehicles, where the idea is that 5 to 8 people can very easily connect to each other and connect to external communication radios, for instance, satellite communication or similar. They can very easily set this up in a vehicle and communicate between them, and also communicate with the external world. And when they leave the vehicle, they are able to take the equipment with them. But it can also be fixed installed in one of these vehicles. It's a very, as I said, innovative solution that works perfectly with the rest of our products. And at the heart of our solution is the INVISIO IntelliCables, which are the cables that are enabling the ease of use between all types of equipment that we offer. The cables contains intelligence, so it is plug and play. As soon as you connect things within the system, a headset, a control unit, the intercom system, more headsets, the cables will automatically detect what is connected and make sure that the system is easily operated. Plug and play, you don't need to calibrate or start up or adjust. It just works straight out of the box, so to speak. Next, please. So we have, for the last 10 years at least, been executing on a growth strategy and have continuously improved and strengthened our market-leading position. As many others, we have, of course, been affected by the last 2 years of COVID and lockdown in many markets, but we decided to continue to execute on our plans. We decided to continue to develop new products during that period of time, but we also decided to continue to build our organization, especially on the sales side, so that when COVID eventually started to lift in many countries, we were ready with new products and with a sales team that is trimmed and ready in all geographies. And as product goes, as I said, we have been acquiring Racal Acoustics, so the portfolio after COVID was now much broader with a new range of Racal products. We have a global sales team of more than 60 people that can cover the customer organizations that we address in both Europe, US, and other parts of the world. And we have been strengthening continuously the R&D organization with new experts in artificial intelligence, software, system integration, etc. We have a new platform, our Generation 2 platform, that has been finalized and is now being introduced into the market. And this is a platform that we expect a lot of sales from in the coming years. We have also expanded the product portfolio with more headsets, our own developed over-ear headset T7, the Racal products, as I said, and the intercom. So we are well positioned for continued growth in the coming years. Next, please. So in Q3, which we left a couple of weeks ago, we saw that our markets is returning to something that looks like normal after COVID. We have seen a very high increase in our order intake in 2022. And actually, after Q3, our order intake as a rolling 12 months for the first time exceeded 1 billion Swedish kronor. So that was a milestone in our company history, and it was a lot higher than the equivalent quarter last year. So we today have the strongest order book ever in the company history. We still see a little bit of lag in deliveries because of component shortages and so forth from the COVID situation, but it is gradually improving, and we believe that once we are now getting into next year, we are getting back to conditions that are close to normal. And as I said, we have been continuously investing throughout the COVID years, so that we now have a very strong product portfolio and a well-trimmed sales organization, so we are ready to continue to grow. As a side note, we just yesterday announced a new order for another 40 million kronor from an existing customer. Next, please. And I don't want to go into details with the numbers here, but just want to say that Q3 was our strongest yet this year. It really shows that we are now getting back on track. We had a couple of less good quarters in Q1 and Q2, as we were still sort of coming out of COVID and due to the many investments we have made. But now we are starting to see revenues go up again, and a very strong order intake. You can see at the bottom here that after Q3, our order book was 615 million, which was almost 3 times as high as the same quarter 1 year ago. And our gross margins are also now moving up to where we would like to be, somewhere between 60 and 65. We are a little bit impacted by still having to buy certain components at a higher price on the gray market, but other than that, we are moving in the right direction with a very strong order book. Next, please. Of course, the geopolitical situation with the war in Ukraine has had a huge impact on many companies and industries. For us, it is, of course, without doubt that it will have a positive effect on our revenues over the coming years. We see substantially increased defense budgets in the coming years from many countries, especially in Europe. A lot of European countries, NATO countries, are moving up towards the NATO target of 2% of GDP. Some are even higher, and there will be many, many investments coming in material, but also in more soldiers and other types of personnel. And there's no doubt that the need for modern communication equipment with hearing protection is great in many countries, and that the larger budgets will allow for a faster rollout. In the short term, we think the impact for us will be limited. It will be a little bit later down the road where the larger budgets and the more soldiers will mean increased demand for our types of products. It does take a little time because the products we provide are often part of what we call modernization programs, where you are looking at it at a longer time perspective. So somewhere from 23 and onwards, we believe that we will start benefiting from these increased defense budgets. Next, please. So as I said, now it's time to start harvesting from the many investments we have made in the last years. We think that the market conditions are starting to resemble those before the pandemic. We predicted that the order intake and sales will be strong in Q4 and into the beginning of 2023, as a result of the large order book that we have and the current market situation. We have a very high focus now on sales and marketing of our many new products. So the future looks bright for INVISIO. It's time now to start harvesting from our recent years of investments. And I think I have one more slide, which sort of sums it all up. The takeaways is that we see very strong growth for INVISIO going forward with good profitability. We have a lean business model with high scalability and a strong financial position. We are in a niche market with high entry barriers where we have a market-leading position and a portfolio of multi-year framework agreements with many customers around the globe. We have a strong growth strategy that we've been pursuing for 15 years and a very strong corporate culture. So the future looks bright, and welcome to join INVISIO on our continued growth journey. And I will stop here, Daniel. Thank you.
Yes, thank you very much, Lars. That was a great presentation of INVISIO. I have a first question on demand here. You said that you have had a strong order momentum in 2022, and we have seen the figures. Where is demand coming from geographically, and also for what type of products throughout the year?
Yes, it is, I would say, well spread across the globe, but primarily Europe and the US, whereas our markets in Asia are still a little bit behind. They have been later in opening up, and some of the activities we had already before the pandemic were halted, and it took a little longer to open up. But it is now starting to reappear as well. But especially Europe and US has been strong on the order side.
Yeah, I see. You have a target to grow more than 20% sales per year. You have not done it in 2020, not in 2021. It looks more bright this year. What is the main drivers for you to reach 20% growth in 2023 as well? We know the high order book, and what is the risk of not meeting the growth target next year, given all the orders you have received?
Yeah, no, I think we're on a good track now. And as I said, part of the strategy is to continue to expand on our product portfolio and also continue to expand the geographical side of things. So with that, we have probably only sold to 10-15% of the addressable markets that we work on. So there's a lot still to do. And I think, of course, we're a little bit depending on the rollout also of more modern communications equipment that we can connect to. But that is all happening with the larger budgets and the faster rollout. So I think we're quite comfortable with that. We can continue to grow the business with a continued focus on geographical expansion and new products to the portfolio and so forth.
Yeah, I see. And then a final question regarding M&A. You acquired Racal Acoustics here some 2 years ago. How is the market looking out there? Do you have any competitors or any other products that you could complement your product portfolio with by doing M&A in the future?
Yes, I think though that our market is a niche market, that is for sure, and we do have a leading position. So there's not a lot of M&A opportunities per se, but we will definitely be looking also for new technologies and new add-ons to our product portfolio, things that can complement what we already have, and there are of course opportunities over time. So we're constantly keeping our eyes open, but this is not a typical acquisition-driven industry, but there are definitely opportunities for us over time.
Yeah, thank you. I think I have time for a final question. You mentioned the stable gross margin. It has been just below 60% here. You said it should climb up to 60-65% in the coming years, for example. I mean, is there a risk that the high inflation we have, increased component prices, is going to put some pressure on the gross margin, or do we have that behind us in your story here?
It is, of course, hard for me to predict what the inflation will be, but I think at least we have good response possibilities to any increased inflation. We have been reacting, of course, with certain price increases of our own, and also working very closely with our component manufacturers and trying to keep this a little bit under control. So far, we think that we are able to manage it, but there might be a few bumps along the road. But all in all, we should be able to get back to the level where we would like to be.
Excellent, Lars. Thank you very much for the presentation and the responses to the questions.
Thank you. Thank you.
Yes, hi everyone, and welcome to the next presentation, which is the final for the day. Together with us now we have BTS, the global management consulting company, and my name is Daniel Torsson, an equity analyst at ABG. So with us from BTS we have the CEO Jessica Skoon. So I let you present the company, Jessica, for some 20 minutes, and then I will have a couple of questions in the end. So feel free to go ahead.
Perfect. Hello, everybody. Lovely to meet you all. Good afternoon. It's the morning time here in San Francisco, where I'm calling in from. Go ahead and hit the next slide. It's my pleasure to introduce BTS to you all. Our founder, who I took over as CEO in May of this year, our founder is now our executive chairman, but he started the company from traditional strategy consulting roots. But I would say from day one, we are a very different type of consulting firm. For 30 plus years, we've been focused on the people side of change, right? Business is the business of people, and I think you'll get to know that more through my examples in a minute. But in terms of just to give you a sense of our current strong kind of global position and competitive position, you can see our net turnover is 2.4 billion Swedish kroner. We have a 36-year track record. We went public in 2001. For those of you who are early investors, you've enjoyed 13% annual revenue CAGR, 17% EBIT CAGR, and 18% annual shareholder returns, which I think is pretty rare, right, in terms of over this couple decades. We have 1,200 people full-time across 36 different offices. We also enjoy a fairly big contractor or part-time network employee base, which gives us some freedom and flexibility and agility, right, as markets become more volatile. And over time, we have now 40 active clients who are amongst the Global 100 list and a little bit over 50 of the US Fortune 100 as BTS clients. Next, please. You can see our global footprint, where the offices are located around the world. About 50% of the business comes from North America. Second biggest is the other markets in mint green, and then we have Europe in purple. The way we run the company is 3 core operating units, so 3 P&Ls, North America, Europe, and other markets. And we also have a set of centers of expertise, which I'll share with you in a minute. Next. So I guess the question is, why is BTS growing, right, year over year in terms of the performance that I shared with you? I already talked about our strong competitive position to be large enterprise clients partner, kind of multi-year partner at the global level. It helps to have a global footprint so we can serve them both with their top company priorities, but also with a local flavor and local spin. The second reason is it's really fun to be BTS. And in the next few slides, I'll share with you how it's hard to put us just in one box. In terms of our competitor set and who we take share from and the types of client problems that we serve. But in a nutshell, we operate in a very global, growing, and highly fragmented market. Next, please. So in terms of the highly fragmented market, I'm going to start with the types of customer problems we solve and the different client budgets that our account teams are able to serve. So the majority of the company's revenue, let's say anywhere from, let's say around 60% or so, is number one, which is going after the CHROs, chief learning officers, chief talent officers, so the general like HR training and talent market. And you can see some of the classic issues, right, that they are trying to solve. And in my most humble view, I would say training and that function in general has been probably mediocre at best, right, over the last 5 decades or so. And I think BTS is an incredible partner there, where we have plenty of end-to-end now leadership development and training partnerships. And I'll explain to you why we're different in a minute. The second client budget is chief revenue officers, sales enablement, so helping clients with their revenue targets and helping their sellers or the people on the go-to-market side of the business be better, right? Close bigger deals, bring their brand to their market base, increase their productivity, and so forth. And then the third one is selling to business leaders, line executives, P&L owners, chief transformation officers, strategy officers, CFOs, and CEOs. And there we, I think, are pretty different and unique in terms of helping to implement the strategy, as well as over time we've been asked to do more strategy creation work as well, and supporting them with their big change and transformation efforts. Next, please. Keeping the same framework, I've added at kind of inside the pink now some of the BTS's major differentiators. So if we group number 1 and number 2 together in terms of the overall training market, BTS's brand and our reputation and our growth has been driven by the fact that we're not theory, we're practical. We don't do just lecture-based training. It's all simulation and high-fidelity practice. So we help them establish high performance by critical role. We help all the leaders understand command of their evolving business model, the financials. We help them make better decisions. And we recognize that all clients are in a unique strategy position in their market with a unique culture and a unique operating model. And therefore, the training should be high fidelity. You can see our competitive landscape on the bottom left. So in terms of kind of this highly fragmented market that's growing, you've got the executive education programs for executive development and readiness, and they have phenomenal professors and great ideas, but in general, they're not practical enough, right? And our clients want to do C-suite readiness for the future of their firm. And what the executives of Nike need to do differently over the next 5 years is different than that of Salesforce, for example. There's plenty of mom and pop boutique firms, but their issue is that it's hard for them to scale. They tend to be not global enough, and their entire business model is framework out. There's the HR search-based companies that have grown primarily through acquisition into broader leadership and talent services, but they still tend to be more search first. And then you've got the tech first companies who we certainly learn from, and they have some great offerings and some great user experience and data collection, but the nature of their business model is to scale their software, which in its nature tends to be quite standard. And then on the right-hand side, we take share from what I would say the traditional consulting firms, because we just have a different approach, right? Rather than focusing on technology implementation or process redesign, our primary focus is to get everybody in the company aligned around the new direction and actually make the change happen. So that's our competitive set. We approximate that we only have 1% share in both groups, and the TAM is probably well over 30 billion. So if we double click now into the offering, so next slide, please. Thank you. So the most differentiated BTS capabilities are in this slide and the next slide. This is, as I've mentioned before, our modeling abilities and our simulation abilities. So we are phenomenal at simulating potential growth strategy options to help in the strategy creation process. And then in terms of implementation and getting people to do the best work of their lives on point with the strategy and the financial plan, we model strategies, business models, entire enterprises, cultural moments, BUs and functions, workflows, financials, high-performing critical roles, and so forth. And I'll leave you with this idea for this particular one, but if you think about any other high-performing team in the world, the football that we're watching in the World Cup right now, those players practice more than they perform. It's part of being world-class, right? It's part of being great. It's part of being exceptional. Militaries practice more than they perform. Companies, in general, don't practice enough. They're not even close to that same ratio. They probably don't even give their people 1% of their time to practice. So little by little, we've been shifting this paradigm for 30 years, because when practice is exceptional and it makes somebody realize this is how to be great at my job, and this is what our strategy means, and this is how we make money, and so forth, they tend to be better performing and the company gets better results. We're also really good at mindset shifting. It's hard to change a person if you can't change their underlying beliefs. And so our entire content library is based on that. And then we do a broad set of advisory services as well, more on the organizational change side. And there, I would say the biggest feeling difference in BTS is that if the clients keep the authorship, they keep the ownership. We're not the firm that just tells them what to do and hopes they do it, but we don't think that actually works very well. So our process and approach doing the advisory and the consulting work also feels different and empowering. Next slide, please. This is our breakdown of the different areas of expertise or practices that we have in the company. So everything from strategy alignment and business acumen to change and transformation to innovation and digital transformation, leadership development, executive presence in teams, sales and marketing, assessment coaching, and diversity, equity, and inclusion. And I would say over time, we took more of these like deep dive solutions to market, but in the last 5 years, we've been doing a really good job of pulling the different IP services, simulations, experiences, and tools across the board to be a broader partner for our clients, which means our average deal size has been going up. Next slide, please. We've also invested for quite a while now on our own digital transformation and digital services. For those of you who've been following us for a while, you know how much that helped us in 2020. But we continue to do our services both virtual and in person. We think that mix will continue. There's a lot of pros to having both. In general, about 11% of our global revenues is licensings, and we typically get larger license deals from our clients in the following, or for the following reasons. Number one, at scale partnerships. So you can see the example there. We worked with a client a few months ago. We have a new sales methodology. We need to get all 30,000 people to understand it and to start to show up to customers differently in terms of how they team and how they talk to customers. So we believe the most effective way of doing that is to actually allow them to practice, right, through simulation. So we delivered a simulation to 30,000 people over 24 hours globally, and that was the beginning of ongoing practice and behavior shift. But in that type of need, it's better to use more of the client's leaders to do the implementation, and that's where the licensing comes in. The second box there is on the leadership and learning side, there's a general push to, we want to democratize learning, and it needs to be more personalized and practical to the individual. And there's a general, I would say, disappointment by chief learning officers from their investments in the large content libraries. The usage is not very high. Why? Because it's not personal and practical enough. So we've been asked to do more re-architecture of broad learning and leadership approaches and the functions. And part of that is our clients then licensing some of our mindset-based tools and micro simulations and so forth, which are more practical. And I think I mentioned the third one already, which is the more we can get our clients' leaders to do the change through their meetings, through their own time with their teams, the better, the more likely it is that the change happens. And so that's another moment when clients will license our methodologies and experiences. So if you go to the next slide, we also have a history of inorganic growth, and that will continue. We've typically targeted, 1 a year or 2 a year, something like that. So we're a little bit behind right now in the next acquisition. And, but in general, I would say in the past, there's been 2 things that have been true. It's given us geographical expansion. And the second thing is a new service offering, right, or filling a capability gap. For us, we tend to focus on small to mid-sized businesses, kind of that mom and pop category I mentioned before. Why? Because those companies also put themselves on the market for sale. I think they tend to realize that they've been successful, but if they want to have global expansion, they need to be part of a broader firm. And of course, we're looking at the quality of the talent as a culture add to BTS as well. Next, please. And look, we're at a really interesting size right now, and it's time to take advantage of our scale from multiple different angles. So in terms of what I'm working on globally is we have amazing client partnerships that in one client, we serve all 3 of the different buyers, and we have a really strong brand, and we advise the CEO and so forth. And so it's just simply a matter of scaling those client examples around the world across our 36 different offices. We're working on taking we've been very, very entrepreneurial at the local level, which is awesome. It means we have very high tenure of our best leaders and our best account managers because they feel free to do what's right for customers in their local market. At the same time, we have pockets of expertise around the world. So taking those experts and making them more of a real-time global support resource rather than more locally focused I think should help us. And redesigning our knowledge management apprenticeship approach. As I mentioned already, we have 600 contractors. A decent percentage of our COGS, for example, in the US, I think we would be close to 9 million spend this year on using external talent. So if the market softens, it's easier for us to kind of pull back on spend there and use our full-time talent to do some of the work. We've been working for a few years now on digitizing all of our center of expertise content and tools, so it's easier to implement and easier to implement at scale. And there's certainly been, given I mentioned the local freedom, there's been a lot of energy from our local country heads to simplify and do more things kind of one global way, which when we help our clients with this shift, typically the people who have all the freedom don't want global or central pushing their ways on them. I'd say right now at BTS, they're actually asking for consistent client campaigns that they can leverage. So it's a little bit more support from global to make their lives easier and give them more time to just be with customers. So Philios and I will be working on that. Next slide, please. The other big differentiator for us is the BTS culture, which I would say is the third point on here. And I experience it. I mean, I've grown up here, so it's one of the big reasons why I'm still here. But I would describe it as high performing, right? We want to hit our quarterly numbers, and we're oriented that way. At the same time, we're fun loving, right? And I would say we're big hearted. So we tend to take a long-term view through market softening, and every time we've done that, it's been in our favor because we've popped out the other side stronger, and we've needed more people than we had going in. But our clients notice it. That's maybe the most important thing. Acquisition candidates notice it, and it gives us a very advantageous spot in a multiple bid moment. But the customers notice it. To give you a sense, just in the last 2 months, I've been asked by 8 CEOs to meet with them who have experienced our work, and they asked me one question. We want to know about the BTS culture. So I thought that was worthy of sharing with you as well. But in general, we're in a strong position with our global offices at this moment in a large, growing, and fragmented market. We have a long track record of high performance, right? And we have a clear plan for both acquired and organic growth. And our culture that got us as far is certainly strong, and I will nurture that and will continue to drive us forward. And if we look at the financials of the last quarter, then I can open it up for questions. In Q3, we had 12% growth. You can see kind of the details on the right. So 12% was currency adjusted, 29% revenue growth given the strong currency advantages right now for us. And 10% of the 12 was organic growth across the units. The reason for the slower growth of 12 or 10 of organic, it was North America, as I mentioned, went to 1% growth in Q3 due to a handful of our software clients who at the time back in May and June were either unprofitable or cash flow neutral, and they froze. They froze when their market valuations tanked, and their investors created a new plan to profitability for them. The good news, as I mentioned on the last report, is that the majority of them are back to being our clients now, and we're progressing forward. So, but in the third quarter, Europe and other markets in APG continued with really great growth, double-digit growth, and improved profit. We will continue to invest in digital to meet those scale and personalized demands of our clients. And moving forward, I mean, we started middle of this year to kind of be recession ready, right? And which helps us whether or not it comes and in whichever strength it comes in. But we've been focusing both on industries and clients with CEOs who we believe will continue to invest in having their people being more agile and high performing in a more volatile market. So, and finally, if you go to the next slide, please. As you may have read, our outlook, we have an unchanged outlook for 2022 compared to what we said in the second quarter. And so we believe that earnings this year will be significantly higher than in 2021. So thank you all. The sun is coming up over here, and I'll open it up for questions.
Excellent, Jessica. Thank you very much for that. I start off with a question related to the financials that you mentioned, the 1% growth in North America in Q3. Have you seen that coming back to decent growth rates again with the US software clients that you mentioned froze kind of overnight in Q2 and Q3 here?
Yes, I mentioned that in the last earnings call. Yes, almost all of them have come back as active clients. So it's like they took basically a couple months of being frozen and then readjusting their plans and so forth, and now they're active clients again. And so the North America's rebound, and specifically the software clients' rebound in the fourth quarter, is one of the factors that we're confident in our earnings being significantly higher than next year.
I see. What about the rest of the US then, except the software clients? Have you seen any slowdown in other industries or other end markets in the North American business?
We had 2 clients in our central area. So think about it as West is 1/3, Central is 1/3, and East is 1/3, essentially, of our total US revenue. We had just 2 clients who stopped initiatives, but that's not enough to be material, right? We tend to, every quarter, have a couple of clients who delay or change their mind on something. So that's still within the margin of error. So no, we haven't seen it yet.
Okay. Interesting. And then looking at the other 2 regions, Europe and other markets, you mentioned them, they were growing more than 20% each in Q3 here. Have you seen any signs of slowdown there in Europe, for example? We're seeing the German economy going a bit slower, etc. Or should we kind of expect them to continue the growth?
Yeah, it's similar to my last answer with the central market in the US. There's been a couple customers who have changed their plans for next year, but it's not material enough yet. But yes, I share your concerns in general, right, for the German market and the higher energy costs and so forth. But yeah.
Okay, so no material effects you have seen throughout Q4 at least. Okay, interesting. And then going into 2023, I think this is probably the most expected recession in a very, very long time. Does it mean that your clients, the companies, are going to reduce spending on external costs like consulting, or are they actually demanding even more now to know and prepare on how to operate in next year so that your January kickoff pipeline looks even better? Or how should we think about 23, or the start of 23 at least?
That's exactly the question, right? And that goes back to us understanding CEOs' views of how they lead and how they run their companies when they're in fear, right? Or when they're in a contracting market. There's no doubt that our company's costs are going up, right? And so they will make adjustments in consulting spend or in spend in general. At the same time, our biggest growth right now in our pipeline for Q1 is coming from company kickoffs. Sales kickoffs, top 300 meetings, top 100 meetings, exactly to your point, because now's the time to over-communicate around how to be agile, how to sell in a recessionary and inflationary environment, any shifts they want to make operationally, cost improvement programs they want to run. So it's a mixed bag, right, in terms of how companies look at the moment. And but in general, it's good to be a consulting company in these moments. I would say, going back to our portfolio, if you look at L&D and learning spend, it's the more commoditized part of training that tends to get canceled. And as you move up in the organization, so the training that's most aligned to a shift in direction, or you move to revenue growth initiatives or big change initiatives, those continue to get funded.
Yeah, I see. You also, you also mentioned that you are more recession ready yourself now as well, and being prepared for end markets, how they turn out. How does it affect you in the labor markets and net recruitment here? Are you a little bit more cautious on hiring people across your offices, or are you still kind of positive and opportunistic in doing that throughout Q4 here and into 23?
Yeah, so we were behind in hiring coming out of 2020. And we've caught up by the middle of this year, including the people who started in Q3 with the offers. Across the 3 markets, we feel like we're well staffed, and that's a new feeling and it feels good. So in June, we hit the pause button on hiring around the world, actually, to kind of see how the markets would play out in the 3rd and 4th quarter and moving into next year. So I think what we'll do is we'll be conservative, very conservative on the cost and hiring side, at least for Q1, and we'll see how that plays out, and maybe even for the entire first half. At the same time, we don't want to shoot ourselves in the foot, right? Every recession, we wish we had hired more during the downturn than we did, and we were always understaffed. So we will be conservative, and we'll let our own growth, right, and our ability to grow and focus on the right accounts dictate when we open up the hiring again.
Okay, I see. That's interesting. And then finally, on the M&A side here, we concluded that you haven't done any acquisitions in 2022. You are still looking at smaller firms, competitors, or complementary products and technologies. Are the prices not low enough, or are the sellers not really there because they haven't seen any slow in demand, or kind of what are the triggers for you to complete a couple of acquisitions here?
Well, we have to be excited about what's for sale as well. So we've looked at a lot in the last 6 months, and out of a lot, we were really only excited about a few. And you know, even in the due diligence efforts of a few and a couple issues, the founders wanted to leave and retire. And if we're going to bring in a new capability of the company, we need the leaders to stick around, at least to have successors in place. So we kind of dropped the interest in that. One of them, I was shocked by the valuation of a private equity competitor. So we just, in terms of our valuation of the company, we gave the offer at what we thought would work, and they went in significantly higher, and good for the founder. So, but I don't have enough examples. That's an N of 1 where the price was very, very high in terms of valuations. I imagine they're going to come down, right? So next year could be a great year for us to take advantage of that, but that needs to happen, and we need to find the right firms.
I see. I have time for a final question. And you are an employee-intense company, lots of employees, obviously. How do you look at salary inflation in 2023 versus hourly prices going up, etc.? How can you mitigate that cost inflation to maintain margins?
It's all about pricing, right? And having a systematic approach to increasing pricing, having the confidence of our account managers with their customers to do that. I think we've done a good job of increasing pricing the last 2 years. The general sense that customers are becoming more price sensitive after 2 years of price increases in general, but our services are so broad that if you go back to that chart, as you move from the left to the right, the price sensitivity gets a lot less. So we need to take advantage of those opportunities. I think our markets are a bit different also in terms of the inflation rates right now and the percent raises we've given in the different markets over the years. So moving into next year, probably Europe and most of the world need a bigger bump in terms of salary raises, with North America being, I think we can be a bit more conservative. But we don't give our salary increases until March, so we've got some time as well to see how the market plays out and see how the first couple months of the quarter go for us.
Excellent. Thank you very much for the time, Jessica. Very interesting times, and we look forward to look at the Q4 report in February.
Super. Thank you
very much.
us.
Have a great day.
Good day.